We have Dr. Velumani ji with us. He had Thyrocare in the past and he exited some time back. So, sir, if you are free, we are kindly requesting you to take the stage so that more people can benefit from your experience. So, Srinivas, if you anybody else in the audiences, if they have any question or anything, welcome, sir. Welcome, Velumani, sir.
Oh, sorry, it was in mute. Good afternoon. Can you hear me?
Yeah, sir. How are you?
Good.
Yeah, sir. We can.
Life is good. Life is alternate days good. And
So, sir, our audiences are blessed that you joined today. So, we would earnestly request you to kindly share your experience or maybe anything you want to add or any suggestions for the beginners or maybe the market participants so that your experience can help them in their investing journey. Over to you, sir.
thank you. ऐसा तो मैं स्टॉक मार्केट में कभी इन्वेस्ट किया नहीं था until I exited my company, and I am now into stock market because जैसा एग्जिट हुआ जो पैसा को मैं स्टॉक मार्केट में डाला, ऐसा भी है मेरा फॉर्चुनेट था जब मैं एग्जिट किया मार्केट पूरा पीक में था और उसके बाद मैं पैसा डाला और मार्केट नीचे आया। बट हैविंग सेड दैट, मार्केट तो मार्केट ही रहेगा और इंडस्ट्रीज अपना ही रंग दिखाएगा, कभी उतार कभी चढ़ाव। और किसी भी इंडस्ट्री में भी कंपनियां भी बहुत सारा अप्स एंड डाउन्स होते हैं और एक लिस्टेड कंपनी का प्रोमोटर था और प्रोमोटर के हाथों में भी ज़्यादा कुछ नहीं होता है। कभी कभी क्वार्टर्स अच्छा चलता है, साल अच्छा चलता है, स्टॉक वहाँ की वहाँ ही रहता है। और कभी कभी कुछ ज़्यादा उसमें मज़ा आया ही नहीं है, लेकिन ऊपर एक लहर आ ही जाता है। तो ये बहुत सारी बड़ी बड़ी खिलाड़ियों की असेसमेंट है। ये लोग कभी भी किसी भी शेयर का नज़र लगाएगा, वो शेयर ऊपर जाता है। लॉजिकली ये लोग कर रहे हैं या नहीं है वो भी मुझे नहीं पता, क्योंकि एनालिस्ट जो लिखते हैं, ज़्यादातर एनालिस्ट को फुल नॉलेज नहीं होता है। अगर बिजनेस की फुल नॉलेज होता है, प्रोमोटर की नहीं होता है, और बिजनेस की प्रोमोटर की दोनों की नॉलेज होता है, तो वो कंपनियों में जो ऑपरेशनल एफिशिएंसीज, अग्रेसिवनेस वो भी नज़र नहीं आते हैं। तो उसका मतलब है स्टॉक मार्केट में अंदर जाना सबकी खेल नहीं है। ऐसा तो ईटीएफ और म्यूचुअल फंड में पैसा जितना मिलता है, जब भी मिलता है, जो एक्स्ट्रा फंड्स होता है उसको डालते ही जाओ, लॉन्ग रन में एक अच्छा रिटर्न्स मिलेगा। जो लोग कुछ टिप्स व्हाट्सएप में या कहीं से भी टिप्स देकर, टिप्स लेकर और इन्वेस्ट कर रहे हैं, अगर वो इन्वेस्टमेंट का पैसा अगले 6 महीना में रिक्वायरमेंट होएगा या किसी से उधार लेकर स्टॉक मार्केट में गया, तो काफ़ी कुछ प्रेशर आ सकते हैं। सुनने में पढ़ने में आता है बहुत सारे लोग डूब ही गया है। तो ये स्टॉक मार्केट हाई रिस्क गेम है, सभी लोग होना नहीं चाहिए। अगर हो रहा है तो एसआईपी में बैठ जाना है, एक्सेस फंड को यूज़ करना है। मार्केट नीचे गया तो भी रोने का नहीं है, जैसा मार्केट ऊपर आता है जरूर मार्केट ऊपर आएगा। बहुत सारे लोग ये सोच रहे हैं कि मार्केट नीचे गया तो गया है, अगर उतार चढ़ाव नहीं होता है वो मार्केट नहीं होता है। और उसके जो प्रेशर आते हैं वो सहन नहीं कर सकते हैं, तो मार्केट के अंदर जाना नहीं चाहिए। मैं काफ़ी सालों से स्टॉक मार्केट के बारे में पढ़ रहा था, अभी तो डायरेक्टली इन्वॉल्व हूँ। मैं इतना ही कह सकता हूँ कि market will give you returns anywhere from 14% to 20%, but it won't give you returns when you want. It will give returns when it wants. And if you are a long-term player, नुकसान नहीं होएगा. आजकल इंटरेस्ट जो मिलता है 3-4% मिलता है, तो आपको अगर 10% के ऊपर रिटर्न्स नहीं आया, इन्फ्लेशन का वजह से आप गरीब हो गया. तो ये सब मेरा इनपुट्स है. मैं ज़्यादातर सुनता हूँ, क्योंकि ये फील्ड में बोलना भी थोड़ा केयरफुली बोलना होता है, क्योंकि बोलने से कोई मोटिवेट होके अंदर घुस के अपना परिवार, अपना भविष्य को खतरे में डाल सकते हैं. स्टॉक मार्केट इज रिस्की. तो इतना ही मैं कहूँगा. अगर कुछ सवाल रहेगा तो पूछिएगा. 2-3 सवाल का जवाब दूंगा.
Yeah, very rightly said, sir. And we also have Aditya sir with us. So I would request him also, if he is free, we can. Okay. Hi, Aditya sir.
For Dr. Velumani.
हाँ जी, go ahead.
Sir, diagnostic field में अभी हम देख रहे हैं there are a lot of discount, online platforms which are emerging. Thyrocare, your erstwhile organization, has been a leader in cutting prices, garnering higher volumes. So if you can share your perspective, will these new platforms be able to disrupt to switch to an online platform? That would be very helpful. Thank you.
Yes, thank you. Actually, जो लोग आज नए आए हैं और उनमें और मुझ में 25 साल की फर्क था, कंपनी हो या उम्र हो. जब भी मैं आया था तो मार्केट खुला था. कभी किसी ने सोचा नहीं था बैलेंस शीट को 100 करोड़ टर्नओवर हुआ तो कैसा उसकी कंपोनेंट्स की परसेंटेज बदलेगा. तो मैंने तो कंपटीशन देख के काम नहीं किया. मैंने तो शब्द डिसरप्शन करके मालूम नहीं था, एंटरप्रेन्योर करके सुना भी नहीं था. लेकिन मेरा एक ही क्लैरिटी था, टेक व्हाट यू नीड, दैट्स इनफ. तो मैंने कुछ एबिटा कैलकुलेशन में वगैरह वगैरह में मिस्टेक करके प्राइसिंग बहुत लो रख दिया था. ये सबको ये कॉन्फिडेंस और करेज नहीं होता है. तो जैसा मैंने किया, बाकी कॉम्पिटिटर्स को दर्द हुआ. और दर्द हुआ तो वो लोग सोच लिया कि जैसा आजकल कभी टाटा बोलता है 100 रुपया में थायराइड करूंगा, लोग बोलता है ये सस्टेनेबल नहीं है. वैसा ही मुझे भी बोला गया था. मैं तो 100 रुपया कभी किया था, 1995 में किया था. लेकिन ऐसा है कि वॉल्यूम गेम सभी नहीं समझते हैं, तो वॉल्यूम में बात बनी है. और जैसा 5 साल का बाद मैंने कंपटीशन को मालूम पड़ा कि ये लड़का दूसरा लॉजिक में काम कर रहा है, तो फिर वो लोग भी लगभग मेरा ये फ्रेंचाइजी कॉन्सेप्ट में आए थे, एक्सेप्ट 3 players, SRL, Metropolis and LOL. All the remaining found it very difficult even to survive. But then these 3 players had enough of cash reserves, enough of network, enough of volume. So हम चारों 25 साल लगभग 4 ही थे. अभी आप सवाल पूछ रहे हैं कि नया लोग आया है, बहुत डिसरप्ट कर रहे हैं. एक चीज क्लियर है कि मैं खुद वो नहीं कर सकता हूँ जो मैं किया था. उसका मतलब अभी टाइम अलग है, तभी टाइम अलग था. तभी डिसरप्शन के लिए मौका था. अभी बहुत टाइट चल रहा है, क्योंकि सभी लोग उस रेट में हैं जिस रेट के नीचे कोई जा नहीं सकता है. बट हैविंग सेड दैट, आई वाज अ B2B प्लेयर, बाकी सब B2C प्लेयर था. आई वाज द फर्स्ट फुल 100% B2B प्लेयर. वो B2B में डिसरप्शन हो चुकी है, अभी फिर से B2B में डिसरप्ट कर नहीं सकता है. लेकिन B2C में डिसरप्शन अभी भी हो सकता है, क्योंकि जो भी मैंने डिसरप्ट किया इसमें मिडिलमैन धनवान बना, कस्टमर को कुछ फायदा नहीं पहुंचा. उसका मतलब अभी जो भी कस्टमर को फोकस कर रहा है उनको डिसरप्शन करने के लिए मौका है। सो हो सकता है ऑल ओवर द कंट्री डायग्नोस्टिक्स टेस्ट सस्ता हो सकता है, फिर भी बैलेंस शीट बढ़िया रह सकता है। वैसा नहीं है कि सस्ता करने से बैलेंस शीट खराब होता है, वॉल्यूम नहीं आने से बैलेंस शीट खराब होता है। वॉल्यूम आ गया किसी भी प्राइस में, बैलेंस शीट बढ़िया रहेगा। थैंक यू।
Aditya sir, any other question, or otherwise we would request you to kindly, give your outlook. There are many new joinees or audiences. They would like to hear from you. So any input on market or how they should go about it, or maybe few points on pharma, as you always share your insight with us.
Pharma, yeah, go ahead. Somebody wants to ask a question, please do so.
Yes, actually, I just wanted to follow up on the question that I asked. So I understand lower prices B2C के लिए first time हुआ है, and B2B is what you disrupted when you corrected prices in the market. But sir, for B2C also, the quality of the test report and the doctor referral system, that is the larger chunk of the market, isn't it? So if doctor referrals are still, let's say, 60 or 70% of the market, then how at this price, somebody like a Tata 1mg or somebody else, healthy and type and players, how can they get the doctors to sort of recommend their labs is what I don't understand. So two questions in this question. Number one, how can they partner with doctors? And number two, what percentage of the market is actually a referral market by the doctors?
It's a very complicated question और पब्लिक स्पेस में ये इसका बात करना उतना उचित नहीं है। फिर भी ये कहूँगा कि 33% of the doctors are absolutely honest. Another 33% of the honest are grossly dishonest. Remaining 33% is alternate day honest. That's my way of looking at the market. Having said that, customer is the king. Till customer is not the king, the middleman is the emperor. So when you create an awareness to your customer that your tests are only this much, not the entire pyramid will understand. In the pyramid, slice by slice, the awareness will go down. And then doctors also, honest doctors will recommend a honest brand. In fact, I had faced a very tough time because I disrupted in B2B and my B2B partners disrupted in B2C, and then doctors stopped giving business. But then finally, such jeeta hai, truth triumphs, so it took pretty long period for me to establish. Coming back to the doctors will certainly support honest quality at a honest price. So I am of that opinion. As long as somebody doesn't compromise on quality, keeps creating a market awareness that his brand is cheap and best, it will certainly win. But not like how what you expect suddenly. अरे overnight धनवान थोड़ी बन सकता है. Velumani took 25 years. 25 years to reach $1 billion value. हो सकता है मैं मद्रासी हूँ, MBA नहीं हूँ, जो भी है. And it takes time. People should understand. Let me grow 25% year over year. If you grow 100% year over year, you'll only will get temporarily some investors getting confused and investing. Success is never a problem. Sustaining the success is the biggest problem. This is what I will tell. Remaining things, if you ask specifically, I'll answer.
No, that is very helpful, Dr. Velumani. Thank you so much. As for the hostess request, I'll just take 1 minute of the time of the audience. I think, on the sector healthcare per se, the view is positive simply because, we are in an environment where inflation is pretty high. This is a sector where demand destruction say doesn't happen. Very small part of the sector, if at all, is discretionary consumption. Majority of the sector is non-discretionary consumption. So by demand destruction in the sector doesn't generally happen. Also, this is a sector which has historically shown very stable gross margins, both in periods of high inflation and low inflation. So that leads me to believe that the sector has decent pricing power. Whenever input costs go up, service providers, product manufacturers tend to reprice to get back to their normal margins. In some cases, it happens with a lag. In some cases, there is a regulatory hurdle. So yes, they have to comply with those contracts, regulatory hurdles, etc. But it eventually comes back to mean reverts. The margin in the sector always mean reverts. I'm talking about the last 20 years data that we mined in the sector. We saw mean reversion each and every cycle of inflation. We saw mean reversion on both sides. So they pass on benefits also when inflation is low. They also increase prices when inflation is high. Also, when interest rates go up, generally levered balance sheets suffer a lot. That's another worry that investors have today. In the healthcare sector per se, there are very few companies that have a large amount of leverage, especially branded generics, diagnostics, and some of these companies. They are very asset-light businesses. So they don't lever their balance sheet. So interest cost per se is not a challenge because balance sheet is generally net cash. And some of the other subsectors, which are maybe API chemical manufacturers and some hospitals, they have a good amount of debt. So, there you have to be sort of prudent in this time, whereas demand, even for them, will be non-discretionary, but their balance sheet can pose a risk to their survival. So if you invest in API chemicals or hospitals, you have to be choosy and selective about the balance sheet that you bet on in this time. So that's my 2 bits, host. Thank you so much for taking my view. And thank you, Velumani, sir, for answering my question. It was very, very helpful.
Thanks, Aditya, sir. And guys, those who have interest in pharma space, I would recommend the tag tweet where Aditya sir has shared his insights in the video. So that would be really helpful for the pharma enthusiast. And in the meantime, if audiences have any queries, of course, not related to any buy sell recommendations or stock outlook, they can send a request. We can request the, sirs, that if they would like to take your questions. So if you have any requests, you can send, please. Thank you, Aditya sir. So we have Prateek and Anshul with us. Any questions, Anshul or?
Yeah, hi guys. So I have a query related to health sector specifically. So currently, if we see the current large players in pharma sector, so which ones do we see as the better ones for investing and for future? Because there are a lot of companies and we don't know exactly what products they are developing. We don't go into that much details actually about pharma. It's a sector which people are not much aware about. So which are the few companies or top 2-3 companies you will suggest to not as a buy sell recommendation, just as the future you would see? Thank you.
Anshul, I guess company specific would be difficult for them, but yeah, we can request for an outlook for the large cap companies as you are asking.
Correct. Yeah.
Aditya sir, would you like to?
Yeah. So Anshul, obviously, it is difficult to give a stock specific outlook, but my 2 cents here will be that, if you look at large pharma companies, most of them tend to be conglomerates in the sense that they have an India business, which is basically a branded generic business. They have a US/Western European business, which is an unbranded generic business. They have emerging market business, which tends to be more branded generic. And then they have API, which is essentially bulk manufacturing, raw material manufacturing. So my recommendation to you is you first decide your time horizon. Okay, so if your time horizon for investment is going to be like 6 months or 12 months, then you should buy companies, large companies, which are doing like 20% plus EBITDA, and they are most likely to maintain that EBITDA run rate while they grow as they are launching more products in US and they are gaining more market share. But the upside in that trade is generally not very high because we are all so the unbranded business is basically like a commodity steel business. So in that business, while you are profitable and you may be launching more products to incrementally get more profits, that can happen over a 6 to 12 or 24-month period even. But if your investment horizon is 5 years and you're seeking a slightly higher risk, higher reward sort of return profile, I would suggest you look at companies that are doing very, very low ROEs. In the top 10 pharma companies in India, you can find companies that are currently at 7-8 ROE, despite being a branded generic business as well as a unbranded generic business. So the reason why they're doing that low ROE is because on the branded generic side, while they may be doing 50, 60, 80% return on equity, on the unbranded generic, they're doing negative ROEs. Now, in a commodity business, my style of investing with my kind of investment horizon, which is generally anywhere between 3 to 5 years, I like to invest in those commodity businesses which are competent, yet going through a rough patch because of end product pricing in the market. So if the end product pricing in the market is bad for their products, even though they are competent manufacturers, they will not make money. It's just simple because the price in the marketplace is bad. So they will report losses or negative ROE because they keep investing. So there's a big R&D expenditure, but there is not commensurate top line. Okay. So if you so these companies, eventually what will happen with them is because they are competent manufacturers and their product prices are really, really low because they're making losses, eventually the space crowds out. You will have the incompetent manufacturers moving out of the space, which essentially reduces supply. And if demand remains where it is, which is generally the case in healthcare, the demand is generally very inflexible and supply contracts, then the pricing tends to move up eventually. That will happen sometime. It may not happen in 6 months, may not happen in 12 months, may not happen in 24 months, but should happen over 5 years, for instance. So when that happens, then their ROEs, which is currently maybe 7, 8, 9%, can go to 15, 16, 20% in a very, very quick time frame. Just study the 2010 to 15 time frame for some of these companies. You will see how quickly the ROE can move. That is the delta to play for. Now, the only risk here is time frame, because you're buying a commodity business and it's making losses, and eventually every commodity business should mean revert, given that the producer is a competent producer. The only risk here is time frame. How much time would it take to mean revert, or can it get worse before it gets better? Both the things are possible. Now, these are essentially risks of investing in the way I invest, where the return time frame can be very, very long sometimes. It can test your patience, it can test your temperament to the hilt. At the same time, when the return comes, it compensates you for all the patience and all the time and all the pain that the stock might have given you over a 2-3 year period. So, it compensates for more than that. So that is what I would say. So just create a simple screener, top 10 pharma companies in India, map their ROEs, the lowest ROEs businesses, study them if they are conglomerates, if they have a very decent size India business and a decent size US business. Now, if they have a decent size US business and a decent size India business, and yet they are 7, 8, 9% ROE, basically India business is 50, 60, 80% ROE, and the US business is -5, -10, -2% ROE. And you're betting on the US business to mean revert to, let's say, a 10% ROE. Whenever that delta happens, you make a lot of money. But yeah, that requires a lot of patience. I hope I was able to answer.
Yeah, Aditya, yeah. Just something on diagnostic companies also, if you can give a brief.
See, diagnostic company, so just like Dr. Velumani said, right? That's the reason why I asked that question to Dr. Velumani. I think we made, as investors, we made two cardinal mistakes in diagnostic companies over the past. First mistake we made was when COVID revenues came, right? When COVID tests were happening, COVID volumes were going up. So obviously earnings got increased because you are doing the normal test as well as you're doing the COVID test. And the stock prices went up more than the earnings went up, which means the multiples also went up. Now, everybody, including you and me, knew that COVID is not a perennial business, right? So eventually COVID had to go away. So when earnings were artificially bloated, at that time, ideally, you should have given a lower multiple to those earnings because you knew that the earnings at some point would have to mean revert to normal earnings and the COVID earnings will go away at some stage, which is why these stocks went up to, the levels that they went up. And these stocks are now correcting because the COVID revenues are gone. So now we are making the second cardinal mistake where despite the earnings normalizing, we are actually cutting multiples faster than the earnings are getting cut. Now that is the second cardinal mistake. So given that, so you should have a sense of what the fair multiple is. If you have that sense, and the way I derive the fair multiple is a normal DCF, a 10-year DCF, to get the implied multiple. So you do a normal DCF, you get your implied multiple, and you see where the multiple is today versus that. My guess is you'll find that the multiples today are lower than your implied multiple, which essentially is the second cardinal mistake. Because now that the earnings are sustainable earnings, your multiple needs to be at least the average multiple, if not higher. And Street is again making the same mistake. Yeah. So see, this behavior of investors of chasing momentum, chasing earnings, creates this sort of volatility in stocks in times like COVID and ex-COVID. And as investors, we can leverage that. We can leverage that by buying in a higher weight at the right time and being light on it at the right time. So in the portfolio that I manage today, we are building more weight on diagnostics. As Velumani sir said, disruption may happen. We don't know, but it will take 10, 15 years. It is not going to happen tomorrow. But the stocks are falling as if the disruption is already happening for the past 2 months. That's not the case. The data is not indicating so, at least for now. So that's how I look at the diagnostics space, Anshul.
Okay. Thank you, Aditya sir.
Thanks.
Thanks, Anshul. So Pratik, you can unmute and ask your question, please.
सर मेरा क्वेश्चन नहीं है, मैं साइकिल के बारे में बता रहा हूँ. अंशुल सर ने जो फार्मा के रिगार्डिंग पूछा, तो प्रिंस सर आपको मैंने बोला था एफएमसीजी सेक्टर के लिए कितने सारे स्पेस में कि कैसे साइकिल ये परफॉर्म करेगी. ठीक है, तो सेम मैं अभी दूसरी साइकिल के लिए बोल रहा हूँ कि फार्मा के अंदर कौन सी साइकिल प्ले करेगी जो अगर रिसेशन आता है, जिसके हाईली चांसेज हैं, तो ऐसी कंपनी जो ऐसे टाइप के सेगमेंट में वर्क करती है जिनकी डिजीज रेगुलर बेसिस पे चाहिए होती है, लाइक शुगर की हो गई, डायबिटीज हो गई, डिप्रेशन हो गई, स्ट्रेस हो गई. अगर आप पास्ट स्टडी उठा के देखोगे साइकिल में, तो ऐसी कंपनी ही आउट परफॉर्म करती है इस टाइम पीरियड्स के अंदर जहाँ पे रिसेशन आता है. पिछला पास्ट डेटा उठा के देखेंगे तो जो सबसे ज्यादा बेनिफिट होता है वो इन कंपनीज को होता है कि इनकी सेल होती है. आई नो कि ये प्रैक्टिस एथिकल नहीं है कि अपन किसी के बेनिफिट को उठा के अपन उसमें अर्न कर रहे हैं, बट बिजनेस इज बिजनेस, वो उस वे में ही बता रहा हूँ. तो जो साइकिल आएगी नेक्स्ट, अगर फार्मा सेक्टर में, मैं फार्मा सेक्टर में बुलिश नहीं हूँ, क्योंकि प्रॉब्लम इज दैट कि जो इनपुट कॉस्ट है फार्मा सेक्टर की वो प्री कोरोना लेवल पे नहीं पहुंची है और उनकी सेल है ना वो कोरोना लेवल से नीचे आ गई है. तो ये डबल वैमी पड़ रही है इनके ऊपर कि लाइक अगर अपन पैरासीटामोल कोरोना से पहले 160 रुपीज के अराउंड ट्रेड होता था, जो इनका रॉ मटेरियल है वो अभी भी 320 के अराउंड ट्रेड हो रहा है. तो इनकी इनपुट कॉस्ट हम अभी भी प्रॉब्लम है. अगर आपको इन्वेस्टमेंट करना है तो मैं तो अभी भी फर्स्ट एफएमसीजी, अगर दूसरा सेक्टर फार्मा में जाना है तो ऐसी कंपनी चूज कीजिए जिनकी मेडिसिन रेगुलर चलती है, लाइक शुगर, डायबिटीज, शुगर, डिप्रेशन, कोलेस्ट्रॉल, इस टाइप की डिजीज.
Thanks, Pratik. We'll come to you again. So,
Thank
guys,
you.
in the audiences, if you have any questions from Aditya sir or Velumani sir, you can come up, or the rest of the space we will continue after we have time with sir. Srinivas, any question you have?
Sir, I'm a fan of Aditya sir. I'm requesting him to have an access to the small investor like me, like क्या बोलते सो स्मॉल केसेस में कुछ हमारे को मौका दियो बोल के बस. That's fine, sir.
Srinivas sir, while Dr. Velumani is on the call, if you call yourself a fan of mine, it's really embarrassing. I am a fan of Dr. Velumani. I would request the audience to direct as many questions to Dr. Velumani as you can. Trust me, his ocean of knowledge is too vast. As far as the small case thing goes, for sure, we are trying something to work out something with small case. We will make a public announcement as and when it's feasible. There are certain regulatory hurdles that we are discussing with the regulators. We will let you know as and when it's possible. Thank you.
Thank you, sir. Thank you, sir.
Aditya sir, one small question. What is the ticket size at your PMS?
So by law, by SEBI regulation, ticket size for a PMS is minimum 50 lakhs. Now, INCRED as an entity has two PMS portfolios. One is the portfolio that I manage, which is healthcare. The second is a portfolio that Aditya Sood of ICICI Prudential, Prudential, he manages. And if an investor wants to invest like 30 lakhs in multi-cap, 20 lakhs in healthcare, that can be done. But both PMSs put together, the minimum investment has to be 50 lakhs. That's the SEBI rule.
Okay, thank you, sir. So we have Puneet and the stock Scorpio, I guess. Scout, sorry. So Puneet, you can come first and then we move on to stock scoop. Puneet, if you have any question, you can ask or we move on to next speaker.
Am I audible?
Yeah.
Yeah, thanks a lot. So my question is for Mr. Aditya. So the kind of healthcare spending that we see in the major nation like US, Europe, so where do you see our healthcare services sector, say 5 year, 10 year, 15 year down the line? The way if our GDP per capita moves from 2 to 5 or 6 or 7, so where do you see the healthcare sector, and which all sector should have the J curve? That's it.
Yeah, thanks for the question. So see, you have to keep in mind that the pricing of healthcare in India is the lowest in the world. So while we say that the percentage of GDP is 3.5%, actually, if you normalize it for pricing, we are closer to 4.5-5% of GDP in terms of our healthcare spend. At the same time, having said that, if you look at the last 10 years in India, and I'm saying 10 years ending March 21 because that's the data I have till now, the latest data is not available. So March 21 ending, last 10-year GDP compounded rate in India had been about 5%. 10-year CAGR of our GDP is 5. 10-year CAGR of our healthcare market is 7.4%, close to 7.4, 7.5. So essentially, what I'm trying to say is that in India for the last 10 years as it is, healthcare has been growing 1.5 times GDP. I don't see that changing going forward simply because we are still massively underpenetrated in the sector. Diagnostics is perhaps one field where we have seen very decent penetration. A very decent amount of population has access to reasonably priced diagnostics. But if you go to pharma, if you go to hospitals, especially private care, where the standard of care is slightly better, a large part of our population is still untouched by these higher standards. So my view is that in the next 10 years, we may be looking at 8% or 9% of GDP going into healthcare, which is currently at 5. So I'm adjusting for purchasing power parity here. So 5 going to 9, which means on reported terms, 3.5 going closer to 6.5 or 6. That's the delta that you can think of. So in next 10 years, if your GDP growth rate is going to be 10% per annum, the healthcare market growth should be about 15% per annum. That's what I estimated depending on the data that we saw. Also, another very, very important thing that you have to keep in mind is that in India, healthcare, barring hospitals where government has physical infrastructure, barring hospitals in the other segments of healthcare, the government essentially doesn't compete with the private sector. So, that is again something which I would like to focus on because all the growth in healthcare spend is going to come to private players, barring in hospitals where some part of that spend will go to the government because they have a huge hospital infrastructure in our country. But barring that, everything else is going to come to private players. So healthcare is for sure going to grow faster than our market, than our GDP, and then the market. But you have to focus on the right stocks because if you listen to what I just said, and if you just go and buy a Sun Pharma, for instance, again, no recommendations, but I'm just saying that Sun Pharma derives a larger part of their revenue from the US business. So even though it's the largest India pharma company, Sun Pharma, but in the context of the stock of Sun Pharma, the larger pie is actually coming from US. So you have to think, which stock you buy, having heard what I just said. What you want to bet on, which horse to race. You have to be choosy and selective.
Can I ask one more question?
Just I wish to add something to this question which you have just now asked.
Okay.
As Aditya said, okay, go ahead.
Hello. Yeah, my
Yes, sir.
question. See, my question is, like, we have multi-speciality hospital HCG. Uh, is is there more, like, is there more investment coming in super special hospitals, or the market share would again be taken by the private player, the one who has a larger buffet to serve?
So if I understand your question correctly, HCG, first of all, is not a multi-specialty. HCG is actually a super specialty. They get
Yes,
about
yes, super.
87% of their revenues from oncology. So what we are seeing and what we have globally seen also is that emergence of super specialty is a inevitability. Okay, it will inevitably in any developed healthcare market, super specialties emerge. So we have, let's say in India now, we have SCG for oncology, we have Narayana Hrudayalaya for cardiac sciences, we have Rainbow for, Rainbow Cloud9, etc. for women-related and pediatric stuff. So clearly, super specialties will be the way forward. They will eventually trade at premiums to multi-specialty. But today, where we stand, multi-specialty hospitals in India are larger than the super specialties. And that's likely to be the case in the next 5 to 7 years as well. So in India, investors generally are very agnostic, have been so far agnostic to multi-specialty and super specialty. And therefore, the larger hospitals actually trade at a higher multiple than the smaller hospitals, which are more super specialty in nature. Globally, that's not the case. Globally, super specialty hospital companies, even though smaller, trade at higher multiples because their audience is stickier and their ROEs are higher and their innovation and treatment sciences is just higher because they are focused on one treatment therapy. So I think that will happen in India over a period of time, but it's not going to happen tomorrow. It's going to take time. Eventually, investors will see the ROE, the cash flow of these super specialties and reward them for the same versus the multi specialties. That's the call I have.
Thanks, Aditya. Velu sir had something to add on previous question. Over to you, sir.
Yeah, as Aditya said, the healthcare industry is growing much faster than the GDP growth, and that is not alone going to contribute. It is also very important to understand that the US mean age is somewhere around 45 to 48. Indian mean age is somewhere 27, 28. All healthcare expenditure starts when the age crosses 35, 40. So the demographic dividends will be too huge into healthcare because India has to become old. The next point is the hospitals and the diagnostics both are now seen as a opportunity for vote bank by the politicians, which means at least a couple of states have made healthcare free. Even the central government scheme of Ayushman Bharat, though yet to take off. So if you look at it, the bottom half of the pyramid will consume the free healthcare services. The top half of the pyramid will use the private. So there will be too much of inputs into healthcare. So if you ask me, overall healthcare as an industry will be growing much faster. People have understood the power of efficiency of the floor, which means they want volume, which means they will reduce the cost, which itself means the consumption will go up. Cost when it comes down, consumptions will go up. Also, the chronic illnesses will have a huge spike. I think the last 40 years it was acute illnesses, infections, which was occupying the healthcare, specifically diagnostics also. But the next 40 years will be chronic illnesses. In case of chronic illnesses, the good news for the players is once a thyroid patient, lifelong thyroid patient, once a diabetic patient, lifelong thyroid patient, diabetic patient. So their prosperity is far higher. Coming to the next question, single specialty or multiple specialty? I think multiple specialty is last 40 years where people didn't understand the power of single specialty. The next 40 years will be single specialty will rule. But having said that, multi-specialty is security. Single specialty is a long-term prosperity. one must have enough time and vision to invest in single specialty. This is my inputs. Please go ahead.
Thank you, sir. So we also have Meet with us. So Meet, over to you.
Hello,
Yeah.
am I audible?
Yes.
Okay, okay. My question is to Aditya, sir. Sir, wanted to know your view on genomics segment. Recently, I was in an event where Suresh Prabhu was one of the speaker, where he is addressing about the growth of India and $5 trillion economy. So he sees huge opportunity and growth prospects in Indian pharma space, especially in genomics segment. So I wanted to know your view on this space.
Hi, thank you, Meet, for the question. Meet, genomics, is slightly innovative sciences. I would categorize it under that, and Dr. Velumani can add more if he feels I am wrong here. But it's innovative sciences is something which the world is doing for the first time. There is no set path per se, and every player in genomics is trying to do something novel, something different to differentiate himself. Uh, if you want to play genomics, the best way of playing this would be like we play drug innovators. So essentially through a basket, because there are too many genomic startups today in the country, and it's difficult today to guess, depending on their progress, as to which of these are going to scale up and which of them will just wither away with time, because their product is just not the best product or their service is not the best service. So my 2 cents to you will be, if you want to play genomics, yes, it is a sunshine sector, very nascent stages, very early stage investing, almost VC investing types. But you don't bet on one horse. Then you bet on 5 horses and pray to God that 2 out of those 5 horses make it to the finish line, and then that they will more than compensate you for the other 3 horses which basically died in the way. That's how I would look at it. Dr. Velumani, if you want care to add more on it.
Yeah, I would just like to add that genomics is not new. It is 25-year-old science. It took pretty long time in US to get convinced this is useful. In India, we felt we also can do. When you pay in dollar, it sounds like cheaper. And Indian guys priced it multiplying by dollar INR. So it became very costly. Whatever is not costly is not consumed, not tasted. Whatever is not tasted is not consumed. So Indian medical industry did not consume at all the genomic studies. It went on like that, literally speaking, till COVID came. COVID brought in a very new perspective to diagnostic industry. What was a reagent, which is again not full genomics, it is related to genomics, a PCR test. What was 1400 rupees per test reagent cost has now finally become only 50 rupees per test. What does that mean? इतना जबरदस्त बाढ़ आया, इतना रिक्वायरमेंट बढ़ा, इतना लोग मैदान में घुसा, इतना अग्रेसिव प्राइसिंग बनाया, सस्ता हो गया. So in genomics also, if some good number of people get in, this is the big problem. अंडा पहला या मुर्गी पहला, वॉल्यूम पहले आता है या प्राइस का करेक्शन होता है. So this is where things are getting stuck. So I hope in another 5-10 years period, people will understand the genomic tests are as cheap as even less than 5,000 rupees. I announced tuberculosis genomic sequencing for 5,000 rupees just 6 months before my exit. But my exit made me to forget the dream. But having said that, I will tell you, genomics diagnostics is not as useful as genomic pharmaceuticals, which means कौन सी दवा काम करेगा, कौन सी दवा काम नहीं करेगा, वो जानना चाहता है तो जीनोमिक स्क्रीनिंग में पता लगता है. आपको ट्यूबरक्लोसिस के बारे में बताता हूँ. Tuberculosis is going to assume a very, very dangerous position if we don't act now. Tuberculosis, when it is treated, people don't take the full treatment and people leave it halfway. That gives rise to a new, a kind of variant which will be resistant to drugs. So Ordinary tuberculosis, if you treat well, it is treated. Drug resistant one, if you treat, you have to avoid the resistant drugs and treat with the drug for which it will respond. But genomic sequencing करने से ये पता चलता है. So now it has become XDR. That means this tuberculosis man will never be cured. He will keep on infecting people around. So ये थोड़ा बहुत गंभीर बात है. मैं tuberculosis के बारे में इसलिए कह रहा हूँ कि उसकी outcome patient को बहुत बहुत serious complications देते हैं. So cutting the long story short, pharmaceutical business will benefit from genomic sequencing. Pharmaceutical companies, if they have to sell their medicine, if it is special medicine, they have to do a free genomic testing for the patient and then do selling of the pharmaceutical. So ये आगे जाते जाते it will be more of the interest of the pharmaceutical companies. Many are wondering why Velumani exited. I am very clearly saying diagnostics as a business will be a customer acquisition mode for the pharmaceutical companies in the long run. And I have a reason to believe by year 2030 or 40, many pharmaceutical companies will do the initial screening of disorders free of cost. This is मेरा एक दूरदर्शन है. तो उसके कारण मैंने वो डिसीजन लिया था. Thank you for inviting me. I have something to attend and I will join whenever there is a session of this group going on. Thank you, friends.
Thank you so much. Thank you, Velumani sir, for joining and adding insights to everyone. So, Meet, any follow-up question or shall we move on to next speaker?
Yes, you can move on to next speaker. Thank you very much.
Yeah, we have Stock Scout with us. Sorry for keeping you waiting. You can ask your question, please.
Hi, Velumani sir and Aditya sir. I have one question. Actually, I don't just want to. I will be classifying the hospitals according to the affordability. If we are going to a hospital, we can classify Apollo, and for the hospitals like HCG Global into a one class called high class hospital, which a luxury class or a very high income group can only afford these kind of hospitals, and other group comes into the smaller hospitals, smaller set like Shalby Hospital, Ashka Hospital, and whatever Kovai Medical Center. So this Apollo Max 40s, this hospital can only be afforded by the high income group only. So when we look into the hospital segment or medical healthcare segment, the expense is increasing, like it is increasing exponentially. So I agree that the cost from the hospital part is also increasing. They are also introducing new techniques, new machineries, and new highly skilled employees. Everything they are also introducing. The cost of the setting is also is increasing. Uh, but the affordability, the per capita income of the individual in India is not that much increasing. So, are you seeing a serious? Are you expecting a serious growth in this so-called high-end hospitals, what we call Apollo Max and Fortis? This kind of hospital, are we really going to see any growth in the upcoming 10 years, or can we stick on to the this middle kind of hospital that what I call Shalby Hospital, Ashka Hospital? These are the listed entities, I guess, and the Kovai Medical, this kind of hospital. Uh, in my view, like this kind of hospital will be better performing if their management is working in a good way, because the affordability is a big factor. The growth is medical technologies are improving in very fast way, and it is become very costly for the hospital owners as well as the patients also. So, comparing with the per capita income increase, is there a room for the growth for the these high end hospitals or rich people's hospital like Apollo Max, Fortis? So, I would like to know your views for a 5 year horizon.
Yeah, thanks for the question. See, I think I need to sort of fix certain things in your thought process. There, maybe see these hospitals, which you so-called high-end hospitals that you're calling, So Apollo has a hospital in Trichy and Apollo has a hospital in Chennai. Okay, Max has a hospital in Delhi Saket, and Max also has a hospital here in Nanavati, Mumbai. So the point I'm trying to make is that even Apollo has various grades of hospitals. Okay, Max doesn't have. Max, all hospitals are high-end hospitals actually, but Apollo has hospitals in tier 2, tier 3 cities which do 20-30,000 rupees of ARPOB, which is closer to what Shalby or Kowai does. And then they also have Apollo Chennai, which can do like a 50-60,000 rupee ARPOB, which is closer to what Max does in Saket or Max does at Nanavati. So none of the so barring Max, which is only the upper end, Apollo, Fortis, etc., they are all sort of a conglomerate in that sense. They cater to the premium customers. They also cater to the middle class, so-called, or upper middle class, or slightly above middle class. So they cater to all these segments. Now you have to understand that below poverty line or slightly above poverty line people also are basically taken care by the government. So 70% of our hospital infrastructure in our country is government infrastructure, 70%, 70. So if there are 1,000 beds in India, hospital beds, 700 of those beds are government hospital beds. Private hospital beds are only 300. Right. So those 700 beds are used by these BPL and slightly above BPL and lower middle class people because they can't afford the private listed players. At least majority of these listed players can't be afforded by these guys. So these hospitals are not targeting those people. So this businesses, so for 1 second, forget that these are hospitals. Let's treat them as businesses. So these businesses, which may be Max or Apollo or whatever, they are targeting the premium customer. They want a customer who wants the best outcome, wants the most amount of convenience, and also can afford to pay for it. Now, whether he pays for it out of pocket or whether he has health insurance and therefore can pay for it is a different subject, but he can ultimately pay for it. And that segment is still a very large segment. And these hospitals, if you think of them, I mean, what, 10-12,000 beds, right? So that's nothing. I mean, an Apollo with 12,000 beds or a Max with 7,000, 9,000 beds, it's nothing. The size is nothing, right? So there is still a and the reason why I'm able to say this so confidently, if you go to Max Saket or if you go to Apollo Chennai, there is a waiting line for patients for the normal sort of admissions. For if you're a higher end customer because you want a kidney transplant or you want a heart transplant or a bone marrow transplant, they will immediately admit you. But if you are there for a sort of a maternity delivery, or if you're there for a normal sort of broken leg, fixing, then you have to wait for some time before you are treated. Okay. So the occupancy rates are very, very high in those treatments, even in these hospitals, which treatments are so-called mass issues like maternity and broken bones, etc., etc. The occupancy is slightly lower in premium segments where, a bone marrow transplant or a kidney transplant or something. So clearly, you should not be reading these businesses as businesses which are not mass businesses, because they are actually not meant for the masses. They are meant for those who are, number one, insured, even if not insured, at least rich enough to pay the bill themselves. And that customer base itself is very, very large. So they are, not even close to maturity, if that is what your question was. The scope for growth is still huge. And that growth, into my mind, will continue. So if you look at historically, their top line growth has been between 12 and 15%, where the ARPOB growth, which is basically where the pricing and the case mix is captured, the average revenue per bed growth. The average revenue per bed growth has been historically in the range of 3 to 5%. And the rest, 6 to 8%, has actually been volume growth. So that volume growth is still continuing here. I don't see a challenge in that volume growth. That 6 to 8% volume growth will be very, very easily done. And which is why even Max, at this stage, is going for a huge brownfield expansion, right? They're expanding Nanavati, they're expanding Saket, they're adding 3,000-4,000 beds over the next 2-3 years in their base of 8,000-9,000 beds. So clearly, there is enough demand, and supply isn't enough for premium beds in our country, which is why all these hospitals are on an expansion spree almost perennially. I think that answers your question. As far as the lower priced hospital goes, they have a different target segment, and that different target segment will have different economics. They will have different ARPOBs, different ROE, different margins. So then it becomes the investor's choice whether you want to play the segment which caters to masses, and you want to play the segment which caters to premium customers. That is your own call, and depending on the fundamentals of the stock also, obviously. But yeah, so I hope I have been able to answer and not confuse you further.
Yeah, so one word, so you are opting, if you are giving a choice, which one you opt? Hospital for masses or hospital for the premium customers? If both are well managed. Please don't tell any names. I just wanted to know your view.
So in my portfolio, the portfolio that I manage, we are invested in HCG, which is a super specialty, and you can assume that they cater only to the premium customers. And we are invested in Aster DM Healthcare. Aster DM Healthcare is across. So they have certain hospitals in very posh areas where the pricing is accordingly. There are certain hospitals in very not so posh areas, tier 2, tier 3 towns, where the pricing is accordingly. So Aster, kind of like Apollo, caters to across segments in different facilities.
Thank you so much for that.
Thank you, Aditya sir. It was really nice, and actually, it's always a pleasure to listen to your wisdom and insights on pharma space. I have been your consistent follower, and I do watch your videos, and it was really nice of you to spare some time and add value to today's spaces. And anything, sir, you want to say concluding remarks to our audiences? And we also have Deepak, sir, if he would like to take the stage.
No, I would concede the platform to Deepak. Deepak, all yours. Thanks a lot, guys, for giving me so much airtime. I was actually here to just talk to Dr. Velumani, but thank you for giving me so much airtime. And over to Deepak.
Yeah. Deepak sir, we have sent you the request, and even Viraj also. So if you guys are free, you can take up the stage, please. So guys, if you have any questions from Aditya sir, we can take 1-2 more questions, or rest we would once again thank him for sparing time. And it was dual pleasure for us for having you in our spaces, as well as Dr. Velumani. And it was a random space, and you guys joined and added so much of value. Yeah, Viraj, hi. Viraj, am I audible?
Yeah. No, I was saying thanks a lot, Aditya, for sparing so much time, and you always add a lot of value. So it was always great to, I mean, anybody can know the portfolio, but the thought process that you outlay, at least to generic investors like us who are not specialists in a sector, adds a lot of value. Yeah? Thank you.
Most welcome, Viraj, sir.
Yeah, +1 on this, sir. Yeah, Samarth, you can ask your question, please.
Yeah, this question is to Mr. Aditya, and if Viraj Mehta can also answer. Any MNC mid-cap companies which you are right now seeing for long term? Mid-cap pharma, mid-cap anything, but it should be MNC.
So I'll answer my bit, and then maybe Viraj can add. I'm not a big fan of MNC pharma companies. MNCs in India in 1980s had about 90% market share because Sun, Lupin, Dr. Reddy's were not born. Today, MNCs in India have 10% market share. So this is a subsegment within pharma that has lost 80% market share over 40 years. That's a consistent loss of almost 2% market share every year, which is huge. By any stretch of imagination, it's huge. And they're still losing market share every quarter, every year, every month. So I don't see MNCs in pharma as competent players. Why still MNC stocks trade at higher valuations, and why still MNC companies, are sought after? It's for two reasons. Number one, the float is low, so the stocks appear to be more stable optically, which obviously is going to be the case if in a low float stock, generally, cornered by funds or whatever, the volatility will be lower. And second reason, because these MNCs are not conglomerates and they're purely branded generics, their balance sheet and margins look very, very good. But trust me, amongst those conglomerates, their India business margins and ROEs are far superior to these MNCs. And they just don't get the value for it because they are conglomerates. They have other businesses which get merged with the India business, and you don't get to see the valuation or the numbers of the India business separately. So that's one reason. Second reason. The third reason is just because MNC, it's a good corporate governance. The answer is no. In fact, pharma MNCs, I think, are the dirtiest MNCs. So you have Pfizer with 3 subsidiaries in India. Only one is listed. You have AstraZeneca with one subsidiary in India which is listed, but the COVID vaccine that AstraZeneca sold in India was sold by the parent. It did not come through the subsidiary. So there you go. Even if they have only one subsidiary, they may decide to sell the product directly from the parent and not recognize any revenue in the subsidiary. And for a Pfizer or a Sanofi, which have multiple subsidiaries in India, they can pick and choose which product to put in which subsidiary. There's no rationale attached to it generally. So if an Indian promoter would be doing this, would be calling him chore and all of that, and would have never touched his stock with a pole also. But because an MNC is doing it, we don't question it. Well, I'm not in that camp. I will question it. If I am buying a stock, I want all the intellectual property of the parent to go through that subsidiary, which just doesn't happen. Okay, they keep circumventing it one way or the other, which really pisses me off, to be honest. And therefore I don't feel like I should pay the valuations that they command today for buying a company that is losing market share, incompetent, and stealing from the minority because they are routing it through different subsidiaries which are not listed, and the listed subsidiary basically gets the leftover. I hope I was able to, bash them enough. Viraj, if you want to add anything.
No, man. I think that's enough for today.
Aditya, any specific recommendation for Procter & Gamble Health, erstwhile Merck?
Sorry, I won't be able to offer stock-specific comments here. Thank you.
Thank you. Thank you.
We have one question in the comments. So any panelist would like to take. A person has asked for a small cap fund with a view of 20 plus years. I mean, his goal is retirement. So any would like to add onto this?
I mean, I think Deepak probably knows funds far better than I do, but I don't think any small cap fund kind of has the same fund manager for 20 years. So I think it's a little bit of a stretch to ask things for 20 years. Prashant actually would know if any fund manager has managed a small cap fund for 20 years. I don't think there were small cap funds also in India before 2001, I think. But again, I think Prashant probably is the right guy to answer that.
Deepak sir, would you like to share your view?
Yeah, hey, thanks. And I came here to listen to Aditya and Viraj. I guess I'm more of a listener here, but on a fund perspective, it's impossible to predict which company will do what in 20 years. So fund ka kya pata yaar? Honestly, if it is a problem, just select a small cap kind of index fund or choose one of those flexi cap funds which will anyway move between large and small and mid whenever they feel the opportunity is right. So why specifically a small cap fund? Especially when the horizon is 20 years. I'm not sure. So I think better to just, if you have a 20-year horizon, just pick a flexi cap fund and go with it. It's simpler to work with. No names, of course, but I think, just strategy-wise.
Thank you, sir. So, Fact Finder, you can ask your question, please.
Thanks a lot. I actually missed a large part of this particular session, and I'm sure there's a lot of stuff because of the quality of discussion between Aditya and Dr. Velumani. I definitely will listen to the recording, but I have a few observations, and I wanted Aditya's or anybody's thoughts on this. Aditya, you mentioned that I don't know if you can hear me clearly. Yeah, you mentioned that in the spend of healthcare in India is very small on a PPP basis versus a lot of other markets. But don't you? In a lot of other markets, health insurance pretty much covers not only your out of pocket, it also covers your it pretty much covers a lot of what you spend as a thing. As a patient, right? Both your inpatient and outpatient, and as such, the penetration of health insurance is quite high. Also, the kind of government cover and the is pretty high. In most other markets. So when you try and combine this spend personally that people put in health insurance. I mean, India, the health insurance is hardly anything, but abroad it is much higher. If you combine that along with your to take care of your along with your health spend, then how does India really look? Because the problem that India has is that there are only 2% of India's population actually earn above 50,000 rupees a month, and only 10% earn above 25,000 rupees a month. So I just wanted some context over there.
No, it's a great question. It's a valid question. Yeah. So see, I'll put it this way. So we can do an exercise here. I haven't done this already, but it will be interesting to do. The reason being, yes, insurance is very nascent in India, healthcare insurance, and it does whatever insurance exists doesn't cover many things which are otherwise covered in many other international markets. But at the same time, do remember that healthcare is by a very large margin. Healthcare expenses in India are the lowest in the world. So again, it comes back to the same point where I agree that a large part of our masses today cannot access good quality healthcare. There is no doubt on that. There is no question on that. The corporates that we invest in, especially when you go to diagnostics, hospitals, when you go to some of these larger pharma companies, they are not catering to the masses. They don't want to cater to the masses. Their target segment is different, right? Their targets. So think in terms of so generally healthcare is more difficult to comprehend, but think in terms of an automaker, right? So a two-wheeler manufacturer is targeting a different segment, and a SUV manufacturer is targeting a different segment, right? So the segment that a hospital like Max or a Aster is targeting has health insurance today, most probably employer health insurance, plus would probably also have an individual top-up cover also, something like that. So I'm just saying that when you put in context the fact that our insurance is low, I agree. But at the same time, insurance is growing very fast. 25 to 30% is the growth in health insurance segment. And our existing customer base for these companies. So just by that analogy, right? If I just were to take that analogy that it's only the people who have purchasing power are the current base of these organizations. Now that purchasing power, by the extension that healthcare coverage is growing by 25-30%, that target market will also grow by 25-30%, right? If I just extrapolate that. But that is not the case, because we have people who are insured, who avail healthcare services, people who are uninsured and still take healthcare, because look, healthcare is not optional. Get that. It is not discretionary consumption. Yes, if it is not affordable, then it's a different story. But in certain cases, there are companies which cater to the previous participant asked that there is a Kawai or there is a shall be which caters to lower ticket procedure, So then the person who doesn't have insurance can go to that hospital if he can afford that hospital also. If you can't even afford that, then we have government hospitals. 70% of the infrastructure is government. So you can go there, which is free, right? And Ayushman Bharat is also trying to sort of give coverage to these poor people who are not able to afford even the basics of procedures. So that mass segment is actually taken care by the government and their infrastructure and their insurance. Okay, that is the target that our government is gunning for. The premium segment has purchasing power, has paying power, and they are paying. And it is the incidence of healthcare events in the premium segment and the growth of the premium segment itself that will drive growth for these companies. I hope I'm able to explain. Otherwise, it's just a lot of words I'm mumbling.
No, Aditya, I think you added a lot of interesting points. The way I was trying to look at it is, had it not been for widespread health cover in these markets abroad, then the pricing of the healthcare would accordingly have come down. It's because of the fact that you have insurance, which is widespread and covers almost everything, is the reason why your pricing of hospitals is high abroad. That's the point I'm trying to make.
I don't think that's fundamentally a correct argument, actually. So if you look at NHS, which is the UK coverage, they bargain very hard with the hospitals that they enroll for reducing, because it's a single purchaser, right? It's a monopoly in UK. So there's only one insurer, and the insurer covers everybody, and therefore the insurer is the single point purchaser, and there are multiple hospital chains. So they bargain very hard before they take a hospital on rolls, right? So the more insured a market becomes, the more the bargaining power shifts from the service provider to the service purchaser, because your buyer becomes institutionalized. Till it is uninsured, the buyer is an individual and the seller is an institution. The moment the insurance becomes too large, the buyer is an institution, the seller is an institution, and then it becomes a negotiation, right? Today you can't go to a hospital and negotiate, na mujhe knee surgery karana hai, kitna rupya loge, right? You just go and ask what the bill is and you foot the bill, right? But your insurer will do that for you, because he is an institution and he will have multiple customers for the same situation. So the more insurance spreads in India, actually healthcare prices will further come down. They'll not go up, they'll come down. But it will happen with volumes, because the more insurance goes up, the more volume will go up. And then, that. So today we are in a spot where volume is going up marginally and pricing is going up marginally. But at some stage, if there is insurance becomes widespread enough, you will have much higher volume growth and pricing may stagnate or even correct at certain stages. But that will accompany with very high volumes, which will compensate for the pricing decline if ever that happens. That is how I look at it. Yeah, I mean, I may be misplaced here, but that's my understanding.
The other question I want to ask you is, when you compare, you made a very interesting observation that the MNC companies in India are actually fairly illiquid, and so they are, in some sort of sense, managed stocks. Isn't that the case with many of the stocks in India? I mean, let's look at the FMCG space. These companies have disappointed consecutively over the last several years, and multiples have only expanded. The best case example is Asian Paints, where the company has not grown its EBITDA for almost 9 months, right? Over the last 2 years, 2-year CAGR is 0. And still, the company's multiples are some crazy, 80 times or 70 times. You have, companies like I'm just saying that, how do you value, are you comfortable with the valuations of the pharmaceutical companies in India versus the peers that you have abroad?
So I won't be commenting on anything outside healthcare, because that's just not my domain. I won't be.
No, I'm saying within the pharma also. If you look at a lot of pharma companies in other markets.
I'll come to that. Yeah. So when you compare, see, the problem with comparing Indian pharma companies with others is two things. Number one, nobody makes the ROE we make. Number two, nobody grows the way we grow. And number three, nobody competes with us on cost. We are probably the lowest cost producers in the world for 90% of the medicines that are available in the world. Okay. So let's take Pfizer or Lilly, right? Now they are innovator. That's a different business model. We are generics. That's a different business model. So any other geography where people were doing generics, those companies are almost wiped out by us. American company Teva, largest, it's Israeli company headquartered in America now. So Teva used to be the largest generic company back in 2008 when I was at Lehman tracking American generic companies. Teva's market cap used to be about $70 billion. 2008 to 2022 now, 14 years down the road, Teva market cap is $9 billion. So it has come down from 80 to 9. At the same time, Sun Pharma's market cap would have gone up tenfold or something. So what I'm trying to say here is that globally, we actually have no peers. We have no comparison set for Indian pharma companies. Number one, branded generics, nobody has. So we only do branded generics everywhere. And, that's a highly profitable, secular, high ROE business. Very cash flow rich. Nobody else does it. Teva doesn't do it. Malin doesn't do it. So, there is no comparable. So which is why it's not fair to compare. Yeah, what I do here is that at least for the India companies' US business, I can compare it to Teva and Mylan's valuation. But for India companies, India business or emerging market business, which is essentially a branded generic business, I really have no comparators.
So what would you use for that?
I use DCF, yeah. I
Okay.
use the hurdle as a hurdle rate. I use what I want as a return on my investment.
I mean, to make it very easy, like a PE, what kind of PE would you use for that?
Depends on the company growth ROE, but the range of P's for the India business ranges. So the lowest P that I've assigned to a stock for their India business is 20. I'm talking trailing, so it's 25 times. And the highest P I've given to any India business for a company is around 35 times. So the range is 25 to 35.
Thanks. If I just have one more question, and this is, I actually would have loved Dr. Velumani to be there on this, what do you think about the impact of MNRA as a technology on some of these bread and butter products, like which are amazing products actually, which is related to chronic diseases like diabetes and blood pressure? You think that there is a lot of, and cancer, there's a lot of work that is going on MNRA methods to kind of reverse some of these things, and they seem to have some success already. What do you any thoughts on this?
No, not really. So it's mRNA. mRNA technology. Yeah. So mRNA technology, which has been used to formulate the vaccines like Covishield. It's a novel technology. Again, it has been, the technology has been extrapolated to arrive at certain therapeutic products as well. But I don't think we have enough data or enough evidence at this point. See, in these mice studies and animal studies, many things work. But by the time they reach human studies, and then within human studies, phase 1, phase 2, phase 3, the success rate of innovation in healthcare over the past 2 decades now has been about 3%. Okay, so something which enters animal lab, from there to become to commercial stage, cross all regulatory hurdles, the strike rate is 3%. So I don't want to be too early to judge something, because it's only in phase 3. Once it goes in phase 3, then the success rate is 50. Okay, so that's when you start hazarding a guess whether what happens if it comes to the market, and whether it comes to the market, what impact can it have. Anything prior to phase 3 is so prone to failure that if you keep evaluating those possibilities, you will have no time left to study anything else.
Thanks a lot, Aditya.
My pleasure.
So one quick question from Viraj, and then we come to Aditya sir for one more question which has been asked by the audiences in comments. So Viraj sir, they are asking for a view on infra space, seeing the increasing interest rates. So how you see that space?
So infra as an investment theme, right, has made no money for investors for I think more than 15 years now. But I think interestingly, to categorize all infra companies into one basket is actually not a correct view. There are infrastructure EPC players, which are a different breed with very low entry barriers, and then there are shovel providers, so who provide products for it. That is where Ravi, my friend, coined the term known as FMIG, fast moving industrial goods. That is where the real money has been made in last 5 years, and which is where I think a lot of value lies. So I think infrastructure as a theme would do very well, but as an EPC player to make large amount of money in this is kind of tough. I mean, if you look at just the success stories, right, there are hundreds of companies which have gone bankrupt trying to be the next L&T, but there is only one next L&T. And L&T is the next L&T, but there are multiple FMIG players who have kind of done well in this industry as such. So I would say product players are far more likely to be successful in infrastructure than just the EPC players.
Okay, thank you. Welcome, Safir sir.
Hi, good evening to everybody.
Sir, we just new views on infra space from Viraj sir. So, do you have any views on infra space in line with increasing interest rate?
Yes, for the first time in maybe 6 to 7 years, I've turned bullish on infrastructure and capital goods. So my view is quite positive for them. It's like they're at the bottom of a cycle.
Right, sir. Thank you. So, Gaurav, you can unmute and ask a question from the panelists. Gaurav, are you there?
Yes. Sorry. Yes, my question was to Aditya, since he's the healthcare expert here. So I was evaluating a couple of hospitals which I've recently listed. One is KIMS, the other one is Rainbow. Now, both of these hospitals, are primarily south-based, and they are trying to expand to other parts of India, be it east or and west, central. So how easy is it for a south-based or a regional hospital chain, to expand to other areas? And what could be the risks? And if the opportunity size is so huge, what kind of a gestation period is there for these new properties to, start throwing cash to them?
So generally, greenfield expansions into new regions is a time-consuming process because you have to understand for a doctor what for a hospital what works is first they have to build a doctor network. They have to get the doctors on rolls, they have to get the consultants on their facilities, and then the patients eventually follow the doctors. So let's say if I have an Apollo and if I were to open another facility in Chennai, I might break even in 6 months. And I'm talking EBITDA break even. But if I'm, let's say, Shalby, which is largely West India, and if I were to open a facility, let's say in East India, it might take me close to 3 years to break even because it takes time to build the network, to get the brand equity going, to get the patient footfall, and then eventually to ramp up the footfall to a level where I can break even. So yes, I mean, it's not always a bad strategy to enter a new geography. Dr. Lal showed us that when they entered from North India to East India, they were very successful. And they're doing well in East India. But it is something that requires a gestation period. And in hospitals, that gestation period tends to be around 3 years.
Okay. And a few minutes back, you gave some kind of a range of PE that you give to these healthcare companies, which was 25 to 35. Is there any similar range that you work with, for these hospitals, maybe EV to EBITDA or, on a per bed basis? Anything would be very helpful.
So hospitals, I have a very wide range. So it's between 15 times EV EBITDA to 30 times EV EBITDA. 15 to 30. Okay. So 15 is the lowest I've given to any hospital. And these are all trailing. So reported numbers, not 1 year forward or 2 year forward, trailing numbers. So 15 to 30 is what I live with in hospitals.
And anything on the per bed basis, like for cement, we have,
So that's very interesting. Yeah. So on per bed basis, now we do it, but we do it just to calculate replacement cost. So the methodology we follow is if any hospital stock price ever breaches replacement cost, that is the time to go, full on into it.
Yeah. Got it.
So classical example for us was Healthcare Global. 3 years, 4 years earlier, before Healthcare Global got CVC to invest in them, the stock price was like 70 rupees. The market cap per bed at that juncture, or the EV per bed, market cap plus the debt that they had per bed at that juncture was about 85 to 90 lakhs. And these are oncology beds, so which have special requirements. So the replacement cost of such a bed would be anywhere in the range of 1.5 to 1.75 CR. So at that juncture, the hospital, because it was under debt and interest cost was eating up almost all of the EBITDA. So they were trading at a valuation of half or less than half replacement cost. So that was one instance. Another instance like that, there is another hospital in India listed today which trades very, very not very, very, but at a slight discount to its replacement cost today. So
Fortis maybe. Yeah.
I am not going to say anything there.
Sorry.
But they do trade below replacement cost. There is a hospital which is listed. So we have that in our PMS portfolio as well, because we believe that any hospital globally to trade below replacement cost is just a buying opportunity. There may be various reasons why the stock is there. There might be a PE selling. There might be a issue with the growth trajectory. There might be a occupancy challenge or a RPOP challenge. All those things, are fixable and get fixed over a year, 2 year time frame. But any hospital needs to trade at least 1.5 to 2x replacement cost. And that's the global standard. 1.5 to 2x is the global range of valuations. And certain select hospitals in India trade at 4 times replacement cost. So that's how we use EV per bed. We use EV per bed to gauge replacement cost, and we sort of use it to We use it to check for extreme valuations on either side. If something 4
Okay.
times replacement cost is avoidable completely, something at
Yes.
half a times replacement cost needs to be very, very carefully evaluated.
And what is that replacement cost? Does it vary strongly in the metro versus tier one, or
It
like?
does. It does. Yeah.
Okay.
Yeah. So replacement cost for
Okay.
a Apollo hospital in a metro, the replacement cost would be 1.5 CR for the bed. For the
Okay.
same Apollo, some hospital in Trichy or some other, southern tier 3 town, the replacement cost might be 80 lakhs for that bed or 70 lakhs for
Got it.
that bed.
Got it. Got it.
So you have to compute
Great.
accordingly. Yeah.
Got it. Got it. Thank you so much for your inputs. Very helpful.
Thanks,
No
Gaurav. So, Safir sir, we have one question on special situations. So that guy has asked what to see and what to ignore in case of special situations.
No, but the question has to be more specific. Like, what do you call is a special situation? For example, even a government policy measure is a special situation vis-a-vis something. The inability to export metals is a special situation. So, what is the context? Because each context may be having a different variable or a different demerger may be a very different situation. The special dividend may be very different. So, the question has to be more specific. Otherwise, my answer will be very vague.
Right, sir. So whoever has asked this question, please be specific so that we can get it answered in a better manner. So Aditya sir, one more question is there. The guy is asking about China plus one policy. Is it visible in pharma space, or he would like to know your view on that?
We have seen enough and more data to confirm that China plus one, at least in the API and chemical space, is happening for sure. But what I want to emphasize here very, very emphatically is that it is not a 6-month, 12-month phenomena. It will roll out slowly. Pharma, chemical, these are generally very, very regulated businesses. And if you want to switch a vendor or add a vendor or add another provider, there's a lot of regulatory filings and regulatory approvals involved in that process, and it cannot be done overnight. It cannot be done in 6 months. Okay, so China plus one, is it happening? The answer is yes. Should you go tomorrow and buy API stocks because China plus one is happening? If your view is 5 or 10 years, sure, go ahead and buy. If you view 6 months, you need to ask yourself whether you're doing the right thing. Okay, so you need to have a long enough view on this. China plus one is happening, will continue to happen. There is enough and more data to substantiate, but it is not going to happen overnight.
Right, sir. There is one more question. Effect of government schemes which has a cap on bed charge treatment cost for a hospital.
So barring COVID, right? I mean, in COVID, in certain cases, government imposed certain caps, price caps. See, you have to understand in the healthcare business, pricing of the product is the federal subject. The pricing of the service is a state subject. Health hospitals, diagnostics are primarily insurers. They are primarily service providers. So in these 3 segments, there is going to be very less impact of pricing caps. So hospitals में भी जब आया था knee and stent पे caps आया था. So hospitals cut the prices that they were charging on the knee and stent, but they increased the prices of the procedure. So if earlier, a knee cap replacement was costing you 2 lakh rupees, today also it costs you 2 lakh rupees. But earlier it was billed as 1 lakh rupee for the procedure, 1 lakh rupee for the cap. Now it is billed as 1,50,000 for the procedure and 50,000 for the cap. So there is, so you have to understand that, number one. Number two, when the pricing comes to product, and then the product manufacturers like pharmaceutical companies, which actually manufacture the product, there, the government keeps regulating the price of certain drugs, and pharma companies comply with those, price caps. The good thing is that these price caps are not based on cost plus; they are based on the average of the brands which are already selling well in the market. So these pricing announcements, although they sound draconian, but when they come and you judge the impact is generally very, very negligible, and it can be made up by a respective pharma company just through growth in the market. So these price caps in pharmaceuticals is not going to be something which can destroy PNLs or ROEs or something like that.
Right, sir. Sir, Safir sir, one question is from paper industry. So I have a small added question to that. So the ban on single-use plastic, will it add to anything to the paper industry? I would like to know your view on that if you are tracking.
Oh yes, massively. Not there's no doubt about that. The question is that you have to buy the right paper stock for, because it is going to be a play for the time being, in the sense that it's not, these policies and all will also cause other substitutes which we will discover. For example, people may move to recyclable material which may not necessarily be coming only from the paper companies, but for now the paper giant or the paper leaders will immensely benefit. In fact, they benefit from many things. They also benefited historically. I mean, in the last few months, they've also benefited from gas prices in Europe and other things, because paper is something that is in demand. There's no restraint in terms of export. They've benefited from China factor. They benefited from increased consumption because schools and other colleges and other things opened. There is actually they're benefiting from the entire movement on e-commerce because of packaging, particularly if they can be recycled, or for example if they're specialized papers of various kinds, those are really benefiting. Even the prices are soaring. So actually, if you see as an example, just to showcase to you that most people that I know have been sort of have fallen in this market. PMSs have fallen, equity funds have fallen, investor portfolios have been dented. The largest paper company in India for the entire year hasn't even fallen 1%. I mean, the fact that it's not fallen itself is its strength.
Right, sir. Though one more question is there that is stock specific, but if you would only like to take, I mean, the person has asked your outlook on ICCI Securities.
See, the answer to that question depends upon the horizon of that person. Because when I give an answer, some people have patience, some people have no patience, some people like to see momentum, some people don't mind that the stock stagnates over a period of time. If you actually see the trajectory of ICICI Securities, the management has the wisdom of building an entire platform of services. Because what they cannot do because of regulatory constraints in ICICI Bank, RBI will not allow a bank to do a non-banking function. All those activities are moving to ICICI Securities. And according to me, ICICI Securities and also, just to give an example, Angel are cracking this model very, very well in the listed space. Of course, there are others in the unlisted space, but they're cracking it very well. So if you have a horizon for time, now what the thing is, and I was discussing yesterday the same thing with Zafar, who's also on the call. It was his birthday yesterday. That people ask for recommendations, but after 1 month the stock doesn't perform, they want to move out. And then after some time, the stock goes to some five, from say 400, it goes to 600, 700. Then they want to jump in. So it's not. So what do you get when you jump in late? You've already missed the entire runs. The point is, it gives a good dividend. It is transiting its business model. It is adding a lot of service. It has a huge amount of data. It has one of the highest amount of data. And I keep saying this, that they're getting into services that are beyond the vision of many others. For example, now they're giving you permissions. They say that if you want to do business in India, we'll get you licenses. We'll help you find the chartered accountants. We'll help you find the lawyers. So what is left? They have actually become the like a marketplace. And right now, just because volumes have dried up, retail volumes have dried up, and markets have fallen, so therefore the interest has come down. The F&O positions, people are not trading, and they have had losses, etc. Momentarily, it looks like things are slowing down, but then it catches up. See, you also see it from the perspective of volatility. As an example, Angel. Maybe I don't know what the price today was, but it must be about 1280, 90 rupees. In a matter of a day comes to 1150. It's like down 10%, and next day it goes up 10%, and it moves up like so fast, because that's what volatility does. It gives you opportunities. So the same thing is happening with ICICI Securities. And actually the sector is moving so rapidly to just a few. So those 4 or 5 companies that are listed in the listed space, the bigger ones, they are cannibalizing the shift of business, whereas a lot of others are sort of becoming nothing, because they don't. many people don't have, many broking houses don't have margins, many broking houses don't have services, many broking houses are basically still vanilla ice cream, whereas some of these guys have become much more tutti frutti or casata.
Right, sir. The fact finder, you have any question from
No,
Safir, sir?
yeah, I had a question for Safir. Safir, if somebody had to look at the paper sector right from scratch, one is, what would you suggest reading? Is there any book worth reading to understand the sector? And second of all, what are those 4 or 5 companies that one should start off with?
No, see, the best source of information is to begin with the annual reports of the companies, because, for example, if you look at the largest paper company in India, which is JK Paper essentially has done an integration of an acquisition called Sirpur Paper, and Sirpur Paper, they're trying to up the ante on Sirpur Paper. So the one trigger is the integration benefit that they will derive. The second is that if you're a market leader with more than 60% of the market, then there is a reason that you've reached that 60%. That reason has to be looked at from your perspective. For example, some years back, they had a leadership in photocopier paper. Now they're getting into specialized paper. They're getting into exports. They have the highest sustainability program, because for every tree that they cut, they plant more trees. So they are actually environment compliant. In fact, most people think paper is anti-ESG. Paper is more ESG pro than most other businesses because of the amount of trees that are planted. Then they're getting into recyclable kind of papers, and that's already happening. If you see some quality paper, you'll find that symbol will appear, either in the bond paper category or in the other things. So you look at those models, and then you look at capital allocation skills, because at the end of the day, it's still a commodity. Now, in the commodity, if you have better allocation skills, then you are becoming a differentiator. And then you also look at management, to what extent is the management selling its shares, buying its shares, what is the dividend payout. Now, if the dividend payout is high, which happens to be an example here, then you know that the cash flows are very good. And also, they have captured the entire market, which Balarpur lost very rapidly. I mean, they took on that entire market in a very good way. So all the minuses of another leader, which became history, but became the plus points for a company like this. And then there are other things. For example, how do you save on the power cost and electricity cost, because it is integral? So are you getting into non alternative sources of energy? And if you are basically even doing that, then you're making your business model more immune. Because don't forget, at the end of this, see, while the commodity cycle right now in the world is very lopsided, at the end of this, some of these commodity companies are moving into monopolies, and some of this is not concerning inflation. I mean, paper is not the criteria of inflation. Food is, and many other ingredients like coal, power, etc. But paper is not a measure, so it's not an anti-government stand. And as more and more people in the world discover that plastics have to be done away with, and there'll be many other such forms, also because of ocean contamination and other things, then you will find that now papers may even move into edible forms. And of course, recyclable is already there, but edible forms also. And I think some of these companies will be at the thrust of innovation.
Right, sir. So, Aditya, sir, we have. Do you have any follow-up question, fact finder?
No, I'm good. Thanks.
Thank you. So, Aditya, sir, a person has asked, is it still okay to invest in healthcare mutual fund? Or additionally, one person has asked how to go about means building a position in various pharma spaces. I mean, various verticals within pharma.
I can't because I compete with mutual funds or something. I can't say it's a good time to invest in healthcare. Simply because valuations are reasonable, earning trajectory is good, and for the reasons I mentioned earlier, inflation, interest rate, demand destruction, these things don't have a significant role in healthcare. It is there on the margins, but it doesn't significantly impact the sector. In terms of how to go about building a position in healthcare, look, majority of the markets outside India, the index would have anywhere between 10 to 20% weightage in healthcare. It is only in India, again, that our weight in healthcare in the index is around 3.5-4%. So when you invest in diversified mutual funds or when you invest in ETFs, you get 3.5% of your money getting invested in healthcare. My call is the reason why I manage a thematic portfolio and not a diversified portfolio and would love to continue to do that is because I see that in next 20-30 years, Indian index might again have 10 to 20% weightage in healthcare compared to today's 3.5-4%. We will definitely disproportionately grow because we are growing faster than GDP, and that will reflect in the weightage in the index eventually. So what I recommend investors today is to have 10 to 15% exposure in healthcare, one way or the other. It can be direct equity, can be mutual funds, can be PMSs, can be anything really. But that's how basically you should have some position in healthcare, because once the index gets there, if you get there, you're probably a bit late. It is prudent to probably build before the index discounts it.
Right, sir. So next question they have asked from Safir sir. Safir sir, they want to know your view on logistics space and small cap FMCG.
No, logistics space I'm very gung-ho on, and in fact I tweeted on it today also, and I've been tweeting on logistics now for several months, etc. Because it is that's what, see, my definition of infra also when you were talking to Viraj is logistics is also infra. So I mean, what do you call as infra? So when you make an exposure to logistics sector, you've indirectly invested in infrastructure. So I'm very gung-ho on this sector, and some of the leaders in the sector are doing very well. Some of the companies, if you read the commentary from Oil Cargo about itself or about the turnaround in Gati with the new management, or you read about TCI Express, etc. Blue Dart has hit a new high today. So the logistics sector is doing very well, and it has a huge potential. It's not a question of where the stock prices are today. The question is, where is the opportunity today? The opportunity is immense, because there is no way Indian economy can grow without having a robust logistics sector. And today, some of the logistic volumes have seen a slowdown just because things are not moving. If they're not coming by ship from international, or exports are curtailed in some way, therefore warehousing is impacted in some way. And some people have inventory problems of the past that have not yet been addressed. For example, in the clothing sector, in malls, etc. All that will get resolved. So it will become a very important play. Now, coming to small FMCG, like I don't know which companies are in the definition of small FMCG, because most of the FMCG is very well organized. So if you give me one or two examples, then I will understand what you're talking about.
Right, sir. They have also asked about QSR space, sir.
So I have, a divided opinion on QSR. There are certain companies in the QSR segment which, according to me, are big time beneficiaries, because, for example, they have expanded, and the benefit of the expansion is yet to show up in numbers, and they have gone through 2 years of relatively bad phase when they were shut down, or, for example, some of their outlets and other forms like events, etc., did not materialize. But on the other hand, there are, for example, today itself I have reduced my positions today, or in 1 or 2 days, in a pizza company, because now I find that with the onset of Swiggy and Zomato, there are many new brands that are coming into limelight, and some of these brands see the advantage of a 30-minute delivery, or the advantage of time delivery is getting over, because even if I order from some of the other places, it comes in 30 minutes, if not 30, 40, and that 10 minutes is not a game changer for me if my pizza is going to be better quality, or I'm getting more authentic Italian pizzas or something of that sort. So, or burgers, as an example. I'm just giving examples of all the kind of food. Now, in the QSR segment, most of these companies are into burgers and chicken and pizzas, and and of course there is Subway, but there are examples, and then there's a huge supply coming in, and the supplies become efficient. So how long? And these companies are not trading at a discount; they're trading at a premium. They are trading at a premium when the raw material prices were impacted. They are trading at a premium when the cost of the delivery has gone up significantly. They are trading at a premium when there are labor issues all over the economy, because now people are, finding scarcity of people, etc. Some of the competitive advantage that some of the new brand launches have not gone well compared to their historic past. So you have to find your own pockets. Some of the companies are doing very well, like I said, and some are not. So if you are on the good side of identifying growth at a reasonable price, then you will do well. If you're on the price of finding a good company with no growth, then even if the stock doesn't fall, it's not that these fall stocks have to fall, but the question is you will not make money, and opportunity cost will be gone. See, also, I'm not a believer. At least I was negative on the market since February, March, April, May, June. I've been negative on the market. I don't believe that now the market is a consensus trade, because if all the consensus is failing, people had a consensus view on metals cracked. People were negative on consumer had a massive rally because today example, look what's happened to Britannia, because nobody anticipated palm oil to sort of crack so much. If you look at, people were saying buy large caps and ignore mid caps and small cap. Mid cap and small cap index has done phenomenally well in the last few days. People were overweight on IT, and IT had a huge fall, and all of a sudden when it fell, then nobody liked IT, etc. So a lot of the implications are also, because what is happening is an overcrowded trade is causing not only concentration of the holdings with too many people, but when few people change their mind, there's too much of supply that comes in. It's like a bhed chal. But non-consensus trade, which happens particularly in small caps and mid caps, what happens is all the people have exhausted their mind and they've sold the position. So today you get a lot of these companies that you will not get if there is one turnaround. As an example, I just tell you one company which is in the welding space, between the last 3 days has moved up almost 15%, and and if you add the volumes on the stocks, there's hardly any volume, and it's not like the stock is not good. It's an exceptionally good company. So you will not get and that 15% can change your mind, in the sense that had you got in at price X, you were getting good quantities because people were not seeing momentum. All of a sudden, the stock goes up 15%. It comes on charts. People see day gainers. They see so many other things. Then it becomes a consensus trade. Of course, if the longevity of the earnings and the longevity of the company is high, you will continue to own it. Like, you don't have a reason to sell it. But the point is that 15% returns in 3 days is lip smacking.
Right, sir. So next question we have for Aditya sir. Srinivas has asked about peptide business and the opportunity size in this, and what are the issues in scaling. So he want to know your views on this, sir.
So on peptides, I think the opportunity is significantly large. There are few people today doing peptides, and it is a complicated synthesis process in that sense. Peptides are closer to biologics than they are to small molecules in that sense, in the process that it's synthesized. So it is going to be a very high profitable, low volume, high margin, high value business. I am fairly constructive on peptides.
Sir, he also want to know what are the issues in scaling this business.
So see, a scale up of any molecule that has multiple synthesis processes is always a challenge. Okay, and that is where the wheat gets separated from the chaff. We can all sort of try and make kilos of peptides in our garages, and will probably be able to do so. But when you go to commercial scale, that is where the challenge of production is. So that's really a challenge, and it's a technical challenge. I don't know so much myself also, but I've been told by people who are engaged in manufacturing that scaling up peptides has multiple challenges in terms of quality control, in terms of yields, in terms of the product characterization, etc., etc. So therefore, it is a difficult to do business, which is why it's limited competition, which is why it's high value. So if you are able to get your bets right on peptides, and if you bet on the right company which can actually do well in peptides, I think in the next 5 to 10 years, there's a lot of innovative peptide products that are going generic. So there is a good amount of money to be made there. Having said that, this is an unbranded business unless you are doing peptides for an innovator, in which case you're supplying to someone who has a patented product, right? Then that revenue stream will last for 15, 20 years as long as the patent runs. So it's an unbranded generic product. So you have to see what multiple do you assign to that business.
Right, sir. So we are getting so many questions on company-specific questions. So guys, we won't be taking those questions. Safir sir, one question Yes has asked. He's asking your view on EPC companies for a time frame of 6 to 12 months on current valuations.
No, you see, that's what I'm trying to tell you. It's like asking view on IT. Then you turn around and say, which IT company are you talking about? Are you talking about somebody that is in the cloud space, digital space, ERP space, SaaS space, etc.? When you say when you give me an example of EPC, you have to give me examples of 2 or 3 companies, because it's like answering a question by saying I'll put a blind eye to the management or their past behavior or governance issues. How can you answer this question? There are EPC companies that have governance issues. There are EPC companies that are excellent. So the question is, what are you talking about? Which company are you talking about? You see, it's like asking a question कि market क्या लगता है, और आप बोलोगे market अच्छा लगता है या market बुरा लगता है. तो जिस दिन market अच्छा होता है, there are stocks that are falling, और जिस दिन market बुरा होता है, there are stocks that are going up. तो आप कौन सी side पे हो?
Right, sir. So fact finder.
And I've stopped giving. I earlier I would try to answer everything. Now I feel that it's genuine money. People have lost money. I feel compassionate about the fact that there are investors who have lost money. Today I was talking to somebody who said that, somebody even who has lost 2 lakh rupees, for him it's a lot of money lost. So I don't want to give an answer that is vague. I want to give an answer. First I must know the answer. And if I don't know, then I must admit the fact that I don't know. Because it's not that I know the answers to everything. If I knew the answers to everything, then my position in life will be very different in investing. Second point is that where I don't know the answer, or where I don't know the answer, I should tell you I don't know. You can ask somebody else. For example, if you're getting such good answers from Aditya on the healthcare sector, I cannot give the kind of answer that he's giving on the hospital side, although I've been bullish on hospital stocks. But he's got a great insight on what he's talking about. So I have to respect his expertise on that. Similarly, if you ask me about a certain company and I know about it, and I'm reasonably sure about what I know about it, then I'll tell you what I like about it. Now it's for you to understand that liking and see whether it plays out, does not play out, am I right or wrong, what is my thesis, etc.
Got it, sir. Right. Fact finder, any question?
Yeah, I have a question for Safir on the EPC side. So if you think, I look at it differently in 2 ways. One is, if there were several comments. In fact, I think there was a report recently by the central government saying that the state government finances are in deep shit. And we know that almost 60% of the capex is done by state governments. So that's one issue. The second issue, albeit I know commodity prices have fallen right now, but typically it reflects only with a 6 to 1 year lag. So anybody who's trying to consume some of these commodities will still pay the old prices. And if you look at the inflation in the budgets to spend on capex, they don't adequately take care of the inflation in the raw materials, be it things like cement or metals. So in that context, and we've had several instances where contractors have said we cannot make money at all given such commodity prices. So what makes you bullish on the EPC business? And let me rephrase, from the fact that states have bad finances and the central government has acknowledged it only a week ago, and the fact that contractors themselves feel that they're not going to make money because of the massive raw material inflation.
So my answer is bullshit, because I will give you the rationale for it. First of all, have you realized that in almost every state, the central government itself is winning? So what are you talking about? The central government itself has to give the budgets to its own government.
Sorry,
So
sorry. You're saying that the central government gives the money to the state government, and the
Arey,
state
when the
government.
if the government at the center is BJP and the government in Maharashtra is BJP, what do you think that the government will do?
I don't think the two are related because the capex comes from the state. It doesn't come from the
Yeah,
center.
but the government
Certain projects,
allocations were not
there are
happening because they were saying that when there are undue benefits, the states are not passing them on. So the share, it is not as if the central government has not dispersed the share to the state governments. It's that the state governments are anti the government, so they don't want to do prosperity. So the logic is more
Right.
political than anything else. And secondly, I believe all the contractors only bullshit, because I'm making a house right now. I know what the amount of margin the contractors are making. They want cash. They don't want to show their income. So when they don't want to show the income, it is very logical for any business to go and cry before the government and saying, I have no scope and I'm in trouble. Have you done a statistic of the luxury car industry? The largest buyers are the contractors. Have you asked the travel agent what is the flow of foreign people? Do you know the Dubai government has put a restraint on the amount of currency that you have to carry, and all these people who are traveling there are from the construction sphere. It's just a mindset of this. It is like no matter what will happen, there will be cartels that will come up and say, I in fact even do legal work for some cement companies, the large cement companies. I'm talking about the very large ones. I'm not talking about the mid ones because I don't know their mindset, but the large ones say they have no grudge, absolutely no grudge. Secondly, the government is tackling inflation. I do not believe that the commodity raw material prices and the commodity prices will remain high. The sheer fall in the last few days has been very significant, and I feel it will sustain, because it is not just the intention of the government of India; it is the intention all over the world. And the government of India, in fact, has done exceptional measures. I feel, for example, this withholding tax that or the windfall gain that they put, despite the fact that that particular day I tweeted on Reliance Industries is a big national service. Why should the government take panga with the rest of the world in buying Russian oil and then profit private companies? So they are realizing, and the tax mobilization on that front, all of a sudden from nowhere the government is going to be empowered with 15,000 crores. The range is between 15,000 to 60,000 crores of gains. So when the government, and what has the finance minister said in a statement? She said this is meant because we have to do capital expenditure, and capital expenditure is happening. By the way, I'm right now doing a project for Adani Group. I'm just giving an example. There is genuine capital expenditure happening. Reliance is genuinely expanding on capital expenditure. So when you talk about the large companies, there is real capex. It's only a question of what you are doing, and of course they will crib, because that is the nature. Everybody wants to maximize the profit.
So you're saying, Safir, that the central government of India is coming out with a statement saying that states are not finances are in bad shape is untrue. Are you saying
The
that?
government has not said even
The
once, and
government
please
has
share
said
it
it.
to
The
me.
government has said
There is
it.
not a single statement from the Ministry of Finance or the RBI that the government finances are in bad shape. I sit on think tanks. I've never heard this statement. I just came from a Monday think tank meeting. They're talking about huge capex expenses. In fact, they're asking for ideas. They keep saying, bring more ideas. We have to develop this, we have to develop that, etc. For example, solar. For example, renewable energy. For example, power stations. Do you know amount of investment that is going in power stations in the country? What they are saying is that we want to now not be in the business of owning businesses, which is fair. The government says we should not be doing ownership of businesses. So they want to encourage what is called as a private PPP partnership. They want to bring the private sector in conjunction with the public sector. Even apart from defense, where there are issues of security clearances, where it is difficult to participate with the private sector, in every other sector they are very happy if you bring in private sector. There's a massive program on the privatization of railways. There's a massive program on the privatization of airports. There's a massive program on in fact, now the government even wants to sell a bank. They have just made a statement 4 days back that one of the PSU banks will be sold. And they're not selling this just for namesake, because they feel, what is the necessity of having multiple PSU banks? I also don't understand why should there be 15 PSU banks. So their agenda is very different. Their agenda is on one side to grow the business. on the second side, not to do activities that will be detrimental to the bottom of the pyramid. Because if they do things that are detrimental in monopolistic terms or in pricing terms at the bottom of the pyramid, then our country, which already has a lot of poor people, will have more poor people. So they don't want to impair that the poverty line. Otherwise, I don't find any reason to do this. And actually, what are you talking about? Take a non-government state like Kashmir. I love Kashmir and I visit there for holidays. I have gone and seen with my own eyes the amount of infrastructure development that is happening, the kind of bunkers, the kind of tunnels, the kind of roads that are being made there. I've gone into areas where cars don't go. So they are spending money where it is required to be spent. It's just the fact that sometimes, things are transitory in nature because there are events that are not controlled. For example, their own finances may be disturbed. Right now, they're not being disturbed by GST, but they may be disturbed by other means. Suppose the capital market has come down and now we all investors pay less tax. So to some extent, because India's tax base anyways is so low, so they have understood this problem. They're saying now this is not going to be milked by taking more money from the taxpayers. It is going to be milked by addition of services. So today itself, Mr. Tarun Bajpai, as the GST secretary, the revenue secretary, has made a statement that in order to grow the business, the GST has to look at taxing education and healthcare. Today's paper.
Can I add one point over here? Safir, actually, let's go back to the budget, okay? And look at the capex announced by the central government for 2023. If you they actually added several off-budget items to show that capex. If you were to adjust for that, and if you were to adjust for inflation, the actual capex budget by the central government in India grew just 1%. Okay, I mean, it grew 12%. You adjust it for inflation, it actually declined. Okay, so this is a fact. I'm not making it
but
up.
the fact is wrong because the fact
it's
is
not
being
wrong.
put. I'll
It's
tell you
not
why.
wrong.
Because the fact is being put at a time when the country had an extraordinary healthcare expenditure on COVID vaccines.
I'm
The
talking
tax
about
was put at a time.
FY23. I'm talking about FY23.
Yes,
I'm not
but
talking
but
about
but
FY22.
but what
Where
is
is the
happening
COVID
is
expenditure in
because
FY23?
because the government itself is being very categorical and saying that we will not like to overstep right now. Don't forget that the divestment program of the government was also impaired. Don't forget that the LIC divestment that happened was a marginal amount, and many other forms of divestment did not happen. So it is treading with adequate care. And don't forget where the rest of the world is. You're making a statement on India by ignoring the whole world.
No, it's not about we're talking
Look
about
at
India.
the
Who cares
America.
about
You guys go. I'm sorry, but you guys and I do a large part of work for top American companies. We go and glorify America, but do we realize America is completely broken? They don't even have the net debt is so much that they do not even know how to figure it out. This is not the position of India. India sits on genuine savings. India sits with the lowest tax base and yet has developed the infrastructure. Don't forget, at the same time, is the fastest growing economy in the world. We are not messing up. We are not manipulating our economy the way the Chinese are. We are not coming and curbing expenses and saying, Alibaba, if you do this, we'll arrest you.
Safir, I think you're going off track about the discussion. You're talking about
No, I'm not going off
infra.
track. I'm
We're
just
talking
trying to
about
open the
infra.
eyes of people that we shadow our country without realization of realities. The reality is very different. It is a progressive nation. It is doing forget the markets. What the markets do is a very different consequence. It's a progressive nation. You have to go and understand this. There are people like me. I'll tell you this openly. I've been offered a green card of America. I'm not leaving. I will never leave my country because I know the opportunities here. I know that our country is going through a transition, whether it takes 2 years or 3 years, the amount of wealth that will be created in India will be obscene. Because the country needs talent, the country needs people to do their. For example, if I'm one of the lawyers who takes all the money in cash, then how am I benefiting the nation? Then you will come and say, but the data given by the government shows this, and the data shows that. Okay, so what does the government realize? The government realizes that the people who earn money do not account for it. So they transit the entire taxation mode and say, let's make it expenditure based. Now they come and say, even in contractors say, okay, we do cash and we do not recognize this. There are people in Delhi, and I went to Select City Walk, and I was told this by 3 stores in Select City Walk. Consumers, the stores are demanding cash. The customers are not asking for the payment to be made. The stores are demanding cash because they don't want to account for the income. They are selling all these products on cash. So what happens is now the government, somebody in the government will get a sound of this. when they get a sound of this, they'll say, you know what, let's tweak it in a different way. Let's introduce a system where it is mandatory for the seller to have a record. Today, just as we talk, the government has done, or the enforcement directorate has done a crackdown on all the crypto exchanges to say all this people who come on Twitter and glorify that they made so much of money on Bitcoin, they are not even in the tax base. Mr. Hardeep Puri has made a statement from when he went to Davos that people are buying 18 lakh rupees car. It's the fastest selling car in India. They have accessed the database and said these 18 lakh car, show they are not even in the tax bracket, but they have the ability to pay EMIs. So what I'm saying is transition. So the government realizes that in order to do whatever it has to do, they have to embrace technology. They have to embrace data. They have to embrace large ticket items which can be accessed by means. And this is exactly what the government is doing. I mean, tell me something. Why will they have to make think tanks? Those think tanks today don't have babus. They don't have government guys. They've got private sector guys coming in. Our entire drive towards Aadhaar and e-governance and all also came from the IT companies only, no? Your income tax returns are being processed by TCS, no? Or Infosys, sorry, Infosys. So there are a lot of things that they're doing in this nature. Those things are going to see. Hamara country unique hai because of the nature of the problem. We were not in the magnitude of. Abhi, I came down from a holiday and I was in France. The other country doesn't open for 2 days. They have a 2 days they refuse to work, then they crib about lack of growth. You're not working, you'd work 5 hours a day. India made employment. If you look at employment also, now you come and say IT companies don't have people. On one side you say we don't give employment, on the other side there's a scarcity. Hospitality industry is in a shortage of people. So we are transiting, and the transition will have its own impacts, which is why I say that eventually the GDP numbers and the growth rates will sustain. The fact is India has to address inflation, and it is doing absolutely the right things by trying to address inflation.
Right, sir. So, Aditya sir, are we good on time?
I have another 10 minutes here before my phone battery runs out.
Yeah, because we took so much of your time, so I thought of asking.
So you have 10 minutes of rapid question answer to tell us where our wealth will be created. We'll give you 3 minutes only for that. 7 minutes will bless you.
Safir, I'm not as good as you, man. I'm not good at rapid fire.
No, you are even better. You just have to try to give us some names. We will figure it out.
Look, if I had to point the general audience in directions of wealth creation, बहुत simple recipe है यार. As Safir was saying, if you look at my entire investment thesis, hospitals, diagnostics, branded generics, what am I saying behind it? I am saying India, India, India. Okay. I am in 100% agreement with Safir on the point that India is going to be very, very big over the next 10 years. Okay. And it's not only about GDP, it's not only about growth and employment, it's also about investors. Look at the global investor. If he wants to look beyond developed markets, उसके पास कुछ बचा ही नहीं है barring India. China is out for a toss. Brazil is going through its own challenges. Argentina, Venezuela, so Africa, Northern Africa, so many of these countries are in turmoil here. FII इसके पास कोई ऑप्शन ही नहीं है अभी. मतलब if you look at emerging markets beyond, Russia is gone. Where do you go? Okay, so just from a wealth creation standpoint, I think next 10 years in India will be phenomenal. Now within that, healthcare I find as a piece which will be, as I said, secular, without exposure to demand destruction, inflation or interest rates. So I feel it's a safe way to play high beta. I know this sentence is sort of an oxymoron, but that is what it is. Last 10 years, healthcare has been 7.5% and GDP has been 5% CAGR. So it is high beta, but it is defensive because it's not linked to GDP. Okay, so I think next 10 years belongs, if sectorally, it belongs to healthcare within India. And the more focused a company is on the Indian healthcare delivery ecosystem, the honesty promoter, the better the balance sheet, I think the more money you'll make. Yeah. So without taking specific stock names, I think this is the best I can point you towards.
No, but I'm assuming from your talk that your focus is on, when you say healthcare, it is more on the towards the hospital and the the preventive care as opposed to pharmaceuticals. I mean, pharma companies.
No, no, absolutely not, Safir. यार अपना 45% exposure of our PMS portfolio is on branded generic pharma companies. These are companies that rely on India sales as their primary bread and butter. They do some exports, but smaller. That's not really that important to their P&L and balance sheet. So if healthcare in India grows, Safir, then pharmaceutical consumption will also grow, right? Who will take that revenue? These guys will only take that revenue, right? And the beautiful fact is that pharma sales in India comes at a 80 to 120% ROE. So it is a highly lucrative business with very good margins and very sticky customer base.
Aditya, I wanted to ask you a couple of questions, and I also had an observation. First
Please.
is that if you look at the domestic mutual fund industry, right, you're right that the Nifty has an exposure of about 3%, but if you look at the average mutual fund holding, they are actually at 7%. So in some sense, they are doubly overweight, and I don't know if they'll go to triple overweight. The second observation is that foreign institutional investors actually are neutral pharma. Now, what you're saying is great, but I don't know. I mean, I'm sure they're very sophisticated investors, but they still don't see it, given by the fact that they are positioned neutrally on that sector. The third thing I wanted to ask you was in terms of shucks. I mean, I forgot. Let me come back, but
Not a problem. Not a problem. So look, to be very fair to the foreign institutional investors, they're highly sophisticated, but they also come with very large ticket sizes, which essentially means that they have to look towards large caps when they invest. Now, the challenge there is that most of these large cap healthcare companies today are not India focused. They're actually US focused. So if you again sort Indian pharma companies by market cap, I would hazard a guess at 9 out of those 10 companies would be focused on US market. Okay. Now, these companies, because they are focused on a unbranded generic business, which is their primary source of bread and butter, and that business has no differentiation, push business, not a pull business, and has high working capital, high capital intensity, US FDA regulatory challenges. These stocks have actually not been secularly, growth stocks. These stocks have actually been very, very volatile and very, very unrewarding to shareholders over the past 7 or 8 years now. So therefore, FIIs look at that bucket and say, look, this is not a very investable space, so let me be neutral to it. Let me at the same time, they cannot ignore healthcare because they have learned from their origin countries that healthcare is a secular business. So they can't ignore healthcare, but they don't see it in the last 7, 8 years of stock performance. So they sort of take a neutral call. That's how I see it. On the mutual funds being overweight, I agree. Yes, mutual funds, selective schemes are overweight. But my point wasn't that. My point was 7% does not do justice to the sector. The average globally is 15. So whether you are at 3, 4, 5, 6, 7, वो देखो यार इंडेक्स में 3 है ना, तो कोई फंड मैनेजर 7 होके बोलता है भाई चौड़ा होके कि भाई मैं तो ओवरवेट हूँ. About 7% of your portfolio doubles, right? You still makes only 7% return, na, if the other stocks don't move. If you are highly convinced, you can surely do better than 7. Right, and the fact that they've done 7 over and above the 3% of 3.5% of the index clearly shows that they have conviction. But then why does that conviction stop at 7? Right? नहीं पता मेरे को. So again, there's no right or wrong here. I mean, my simple point is that if you are bullish on healthcare, 10 to 15 to 20% should be anywhere in that range should be your exposure. That is my way of looking at things. And I do feel that FIIs are in a sorry state here. They don't have enough options to invest in companies that are branded generic focused. They only have options to invest in companies which are unbranded generic focused purely because of the size that they manage. And that is where they don't see the secularity of healthcare, which is what ideally attracts them to the sector. I hope I was able to respond. And if you can remember your third question, I'll be happy to address that.
I know. The third, before that, I mean, from what I gather, you're saying that essentially, do you publicly disclose your portfolio?
So our PMS portfolio is in public domain. It's on our website.
So you're saying that your exposure in general, I haven't seen it, but going by what you're saying, your exposure to the larger cap stocks in India are probably much smaller than you're basically substantially underweight on that stocks.
So the large cap space accounts for 60% of the benchmark. The BSE Healthcare is my benchmark, and the large cap space is about 9 or 10% of my portfolio.
Wow, that's nice. Thanks a lot. No, I mean the only other point I wanted to make is that I don't completely agree with you on India is the only story because the way foreign investors look at it is they don't need to invest in emerging markets. And emerging markets have been underperforming the US for more than 12 years, right? And every year they say emerging markets will perform and they don't perform. And the other way to look at it is, if I want to play emerging markets, I could play through Amazon, I could play through Google. I mean, I'm just saying all these guys are products that we use, right? If you look at the growth of advertising, it's substantial. I mean, from pockets like India. So, and there are ways to play it, is what I'm saying.
No, that's fair. That's fair. I would take your argument on that.
Although, let me tell you that while your Amazon example is right, you cannot play India's growth story through Google or Facebook, because Google and Facebook are doing the bottom of the pyramid, the cheapest. They want to go into rural India and subsidize it. So they don't have any revenue model. India does not even contribute 1% to them. So Amazon is different because Amazon's business is different. Amazon can pick up something not available in India, available in US, ship it to you, get custom clearance and all. So yes, it is a good example. Like Netflix India may not be necessarily Netflix USA. Just as an example, it may have some overlaps, but they are concentrating. They have realized that in India there is a huge market for regional channels. As an example, whether it's Amazon Prime or it is Netflix. So they have figured out that in India we're not going to be able to create a market if we cater only to urban India and English and Hindi films. So now if you see, the entire content is becoming regional, because there the dominance is still by television. The dominance is not necessarily by OTT. So they are now trying to tackle the dominance that exists on television, courtesy Star and other things. Even Disney is now trying to bring in a lot of regional channels because they feel the flavor lies there. So some of the story will not of the international players can't be played through India. I mean, you cannot play. You can read the meta annual reports, etc. You cannot play. He may be very gung ho on India opportunity size, but it may be very different. For example, when you look at an Apple, because in Apple there is an actual consumption of a product, and India has been in a frenzy of iPhones and Macs and other things. So every business model will have a different answer. Just as, when we're talking about healthcare, the American market has not rewarded the healthcare sector. The Standard & Poor Healthcare Index is sort of just given a 10% return for the last 5 years. And this is at the time when but that is per annum. This is at a time when the market has done really well and you had the best of times for, the Pfizers of the world, etc. That's not because what is happening is everything has become so centric around drug discovery, and drug discovery is becoming very, very rare. The average time to discover a drug has now significantly gone up because of huge R&D and many other issues, including human rights and pricing powers and other things which are now coming because of world negotiations. That probably that's the reason why Aditya has decided also to concentrate on India-centric generic companies and not look at companies that are catering to the US. Maybe that's a smart move also. I don't know, because he'll know far better than me. But that's just my guess.
Yeah, Aditya, I remembered my question now. This is regarding regulation of drugs in India. Given that we are a generic market, and you can correct me, I'm wrong. This is probably one of the sectors that I'm weakest in understanding. But what I understand is that if, once a drug is introduced into India, then after a period of it's the first guy who does several of the testing of efficacy and whatever tests are required in order to finally introduce the drug and get approvals from the regulator. But once that happens, after a period of 3 or 4 years, apparently for a new entrant to get into the same drug, he doesn't have to go through as stringent a set of regulations. Now, this has been something as a result of which there are several spurious drugs in India. I mean, the level of spurious drugs is quite a bit in India, and it's a little dangerous thing. But then the regulator, this has been in discussions, that the regulator says, no, we need to have a standardized system of approvals for anybody who gets a drug, regardless of whether he's a second or third mover. What any thoughts on that? First, is my understanding right? And second of all, are there any thoughts on that, and how does this impact the sector?
Yes, I will interject before Aditya answers, because he'll give a very sophisticated answer, and my answer will be way more primitive, but I'll interject before he gives a sophisticated answer. First of all, have you noticed the fact that the government itself has started arresting drug controllers? Because there are drug controllers who are taking bribe and giving permissions to substandard companies, or companies making inferior. If you Google it, you will find that a lot of drug controllers in the last few days have been subject to scrutiny. Secondly, as far as anti-counterfeiting is concerned, the government is making it now mandatory that a certain level of drugs will on the packaging contain barcodes, and those barcodes itself will be subject to scanning, because it's like like a QR code. And by a QR code, you will get to know whether the drug is authentic or not. I think that's what I was trying to tell you, that when the government decides to go to its advisors and they embrace technology, then they find that it is far easier to do things. Now, to impose a QR code or to impose a barcode on pharmaceutical does not require the kind of packaging modifications that are required under the Indian law, under the Indian circumstances vis-a-vis the foreign countries. For example, the foreign companies have tamper-proof packaging. That's a double lock system that you would have seen. You press the cap down and have to twist it. Otherwise, it doesn't function. The level of dispensation of drugs is very different. You can go into even the pharmacist is he's a qualified doctor in a certain way. He's not going to give you a medicine loosely. He'll write your name on the medicines. They don't cut the patta into one piece and two pieces and therefore distort the brand, and therefore you don't even know, you can't even read the packing, because what you get is only a fraction. So they are understanding all these things. And also, don't forget that with the organized sector coming into the pharmacies because of online business, like the 1mg model. And for example, somebody the other day asked me when I was in London that, why do you think Reliance is making a bid for Boots? I said, you know what they will do is, in my mind, I said, I don't know, I'm not Mr. Ambani, I'm not advising, but possibly that if he acquires it, he will integrate Geo and the Indian pharmaceutical outsourcing industry to supply and make it a sort of a different model. I just said that's my guess. I don't know the thing. So there are measures that are being tackled. The government realizes that the loss of revenue on counterfeiting in drugs is way more than the entire size of the pharma industry. And to that extent, these measures are going to be introduced, and they will move on. Also, we can't do packaging because of drug price control order. अगर कंपनी का मार्जिन ही नहीं है टू बेसिकली अमेंड द पैकिंग, तो वो सबसे सस्ता फॉइल वाले पैकिंग यूज करता है. बट दे आर ऑल्सो ट्राइंग टू नाउ सपोर्ट दैट सिस्टम. You also know that in India now there is an incentive that is provided to companies for R&D, which did not exist previously. So they are also trying to say, we'll give you tax incentives if you get more patents, etc., because we are ranked low in the innovation index and the government wants to move higher.
That's correct. Yes. So you're partly right and partly not. So India recognized product patents right in 2005 as per our TRIPS agreement. WTO.
So I didn't talk about product patents. I hope you know you're talking about to the largest patent firm in the country.
I do, Safir, which scares me, to be honest. But correct me whenever I'm wrong. So 2005, we actually recognized product patents in India. So since then, what has happened is that any innovator who launches their product in India gets a certain period of patent protectivity, which means it becomes a monopoly. The drug becomes a monopoly, and nobody else can launch the drug till the patent expires. Now, whoever wants to launch the drug post patent expiry at any point in time needs to do the same studies. Okay, so these spurious drugs are a huge issue, yes, but they are not a huge issue because they do some lesser studies and get on the shelf. They actually don't do anything. They just get on the shelf. Okay, they don't file any papers or anything. These are spurious drugs, which are spurious by the nature that they are not at all approved or recognized by the regulator. Right? So spurious drugs is a big challenge, and as Safir said, yes, RFIDs, QR codes, all these are measures which are being implemented by the industry to ensure that the spurious drugs can be driven out. But look, we have given them a 40-year runway to make inroads into the market. We'll have to give them 10 years to go out of the market, right? So, वो धीरे-धीरे हो रहा है, but it's happening. RFID now, if you buy strips of medicines, you'll notice RFID tags, or you'll notice whatever barcodes or QR codes, which are actually traceable, and you can check the quality of the drug, where it was manufactured, who manufactured it, by scanning that code. So yet the market is moving towards being more genuine products and less spurious. And once the product patent expires, anybody who wishes to launch the product from the proper channel, if it's not spurious, has to do the same level of studies.
Thanks, Aditya.
No, when you see, you slightly confused your answer, so I will clarify that. We are not talking about exclusivity and patent when I talk in the context of counterfeiting. So when you say the counterfeiter has no paper, it is partly correct and partly wrong. In the instance, for example, we go to court on behalf of leading pharma companies and also litigate. No, in a lot of cases, what has happened is that the drug efficacy, there are many violations that happen. There are companies that have substandard production and they get drug clearances, and that is why it is becoming more stringent upon the drug controller. Secondly, the government introduced a law which says that a drug controller cannot allow a company to use a brand if it is in conflict with the existing brand which is under the Trademarks Act, because they say that a lot of look-alike products come. A lot of India is illiterate and semi-literate, and they are not able to remember medicine names. So let's curtail this. If you, for example, you can't say you are called Digene, so therefore I will introduce a Digene. Instead of putting an E, I'll put some other alphabet, or I'll call it Digene, and you will be allowed. So they're trying to curb that. The third point is, while there are product patents in India, like you rightly said, there are also issues relating to compulsory licensing, which are not right now in the comfort zone of a lot of pharma companies. Litigations are ongoing. The law will evolve because that law is not going to come in one day. We also have a consideration of making drugs cheaper because of national interest. At the same time, we also want to reward, because India, despite calling itself the pharmaceutical capital of the world, or the production unit of the world, has failed to even produce a single pharma drug. And now the government says, why does that happen? Why are we just back end and not front end? So companies like Dr. Reddy's, as an example, and others, Dr. Reddy had reached the level of a molecule discovery with Novo Nordisk on diabetes, but still we are not. And now, with the Serum Institute doing what they have done, even there, although it was an AstraZeneca vaccine, there is a clear recognition between the top pharma companies, and some of them even call people like us and say, you know what, it's a hard journey, but we will like to undergo that journey. Sun Pharma wants to do that. Suven wants to do that. Dr. Reddy's wants to do that. In some way, Glenmark also wants to do it. There are many other players also who want to do it. And that journey will embrace itself when they feel that the ecosystem is going to be more rewarding. It should not be that they spend a huge amount of money in innovation and at the end of the day have no pricing power, compulsory licensing, counterfeiting, unorganized channels of, a lot till the past few days, years, a lot of the chemist shops themselves were not being regulated, in the sense that there are no record, because the inventory, they had your goods, they used to keep some medicines from you, and then they would pass on counterfeit products in the same channel. Somebody would come, वो कागज का पर्चे में आपका वो लिख के बिल बना के, they will only write 42 plus so and so is equal to 65 rupees, cash लिया, कोई bill नहीं दिया. So now some of this is changing when the medical companies or some of the chemist shops ask you for your name, they ask you for your mobile number, they print a bill online, requires that. That transition will open a lot of opportunities for the pharma companies. So it's in a sense a very good move to balance it till the time the prices of medicines become much more affordable from a country. Affordable doesn't mean niche. It means that the country's ability to buy high-end medicines also goes up.
Yeah, I totally agree with him. And the only thing I would add here is that innovation in Indian pharma companies has obviously been there for past 20 years. They've been trying, nothing has come out. Obviously, innovation is a tough business. Okay, the strike rate, as I think Safir also said some time back, that the cost of innovation has gone up dramatically. A decade back, the cost of innovating a new product was in the ballpark of $300 million. Today, it's in the ballpark of $2 billion. So it has gone up 6 to 7 folds in past decade. So it is very, very difficult. It is extremely capital intensive. At some stage, Indian companies will get there, but we'll have to wait till they get there. And the ecosystem obviously has to be supportive.
Yeah, and to be fair, when you talk to leading pharma companies, particularly the giants in the world, some of the pressures that are coming in terms of drug discovery are not necessarily coming from the pharma companies. They're coming now because the pharma companies get thrashed by the stock market. when they make expenses that are not converted into cash instantly, because that's the problem with our market, that your company that is doing. And I remember that in India many years back when I had invested in Suven Pharma, I used to write emails to Mr. Venkat, and I would say, I congratulate you on the fact that you are spending so much of money on R&D, and the stock price used to be 60 rupees at the split, etc. hadn't happened. And he used to tell me, I'm very happy that as a shareholder you don't give me flack, because every other shareholder and every analyst meeting I get flack. So I asked him, why do they give you flack? So they say that whatever I earn in my business I spend on R&D, and they don't like it. And that's true about, so a lot of what has happened is the mentality now to please the stock markets, even for pharma companies, is causing a lot of people to shy away from capital expenses that may have a long gestation period. And that can only be compensated when in the concerned countries of the world there are greater incentives that neutralize the impact of this. So you get, for example, grants, or you get some special pricing power, or you get some, even the patent rules have to be amended in some way, or you get damages also. I mean, if you go and sue somebody in India for counterfeiting, and all that happens is you stop him, but he's already made so much of profit which doesn't come into you. And that is one of my recommendations also to the government. Even on Monday, I made this recommendation that the country should impose a counterfeiting tax and become the first country in the world where the tax is collected. One part of the tax is the evasion, which belongs to the government. The second part of the tax is put in a pool and made available to the brand owners to make claims. So if you're copying, for example, a medicine made by, say XYZ company, that Torrent will basically make a claim and say, this is my statement. The government will then have a advisory board to see it, and then will make a payment and charge a facilitation fee, like they charge a passport fee, etc. So they make double income. They make income from the gaps in the tax, and they also make income by facilitating this. And when it comes back to the company that is the recipient, for example, Torrent in this case, then Torrent is subject to income tax again, because it is an income. So I this is one of my suggestions, and I must tell you, the government is receptive. The only thing is sometimes they are lost, because in order to get this, they'll say, where does this happen in the rest of the world? Show a precedent. Who's going to do it? Please sit. And then they'll take time, and then they get engrossed in many other things. But I'm sure that at some point of time, they'll have sort of a lot of these radical changes will come in.
No, I think, Mr. Safri, you actually, I was going to say the same thing, that the markets have put pressure. And let's look at data. The data suggests that, in fact, companies are so bothered about margin expectations that over the last several years, the ratio of R&D expenditure to sales has actually gone down for most of the Indian large cap pharma companies. And this is despite the fact that there's been severe price erosion and not too much of revenue growth. So while I mean, the point is that we can say that they should invest, they are not. I mean, I look at what they are doing rather than what they might say. My question to Aditya was on the fact that today you get when you go to a doctor, he typically mentions a brand. Is there any regulation on doctors mentioning the salt rather than the brand? Because honestly, I think that could be a risk to some of the branded generics in India.
Yeah. So I'll give you two responses. Number one, yes, there is a regulation that says that all government hospital doctors have to mandatorily write the salt name. Okay, and they do write it, but the regulation doesn't say whether they can or cannot write the brand name. So what most doctors have started doing, so let's say you're at one of the BMC hospitals in Mumbai, if they want to give you paracetamol as a prescription, they'll write paracetamol, and then in parentheses they will write Crocin or Calpol or whatever, right? So when the patient again takes that prescription to the pharmacy, he gets the Crocin or Calpol or whatever is written next to paracetamol, right? But for private doctors outside government hospital setups, it is not mandatory to write the salt name, so they can just write the brand. The Medical Council of India has been fighting this. They don't want this regulation to come in because they say that in India, the quality controls are not as high as a US FDA. So brand represents quality. So they should be given the choice of prescribing the right brand to their patients so that they are ensured, so that they are satisfied that the correct quality of drug has reached the patient rather than some, nook and corner garage manufacturer making something. So that's the reason why we still haven't moved to the unbranded generic model outside government facilities.
No, I agree with you, Aditya. In fact, I come from a family of 5 doctors, and I've asked this question to all of them as to why do you mention a specific brand? They said it's because of quality control. So if you recall my first question, it was primarily on quality control, that the government has actually been threatening, and I read this at least 4 or 5 years ago, that there was supposed to be some regulation that was supposed to come through on quality control for all pharmaceutical manufacturing, and that has not come through. And I mean, Safir, if you've got such good relationships with the government, I think that's something that is beneficial for the entire country.
No, I don't have good relations with the government. It's like, what I'm saying is the government is being candid. For example, if they say that give budget sort of views, then earlier they would not care for your views. They would only ask the views from the FIs and top bureaucrats and others. Now they say that you can send suggestions because there is a wider group of people who are looking at the feasibility of this. So, for example, now they're finding experts. They'll come and say, they look at your approach. For example, let's assume that I am not pro-India. Then they will not call me. They'll say, when you are not pro-India, why should we call you to give suggestions? So but it does not mean that I have to be pro the government. I can be pro the country and I can be politically neutral. On the other hand, for example, if I miscommunicate information because I come and say that this is bad or that is bad about this thing, and some of it is not real, because see, I can as a shareholder say that imposition of tax on Reliance Industries is bad because it hits my stock price. But at the end of the day, it is actually very good for the country, because you have now created, there's that 60,000 crore or whatever, even if it is 50 or 40, is a huge windfall for the government. 40,000 crore is as good as the top level divestment being done. It will open. So what I'm saying is that they're open to suggestion, and obviously somebody in the government, I don't know who, but somebody in the government is being responsive enough for this. Now they have calibrated the gold part. There are debates on what it will do to smuggling and other things, but they have calibrated some of this and said that, we will be able to deploy things. So what is happening, as an example, which I've noticed, and I did not know what was the reason of this. I was also wondering what has gone wrong all of a sudden. Now, if you land from a foreign country into the airport, what they've done is they put scanning machines. Your bags have to be scanned. So I used to think that first I used to think, why are they wasting the time? Baggage में होता क्या है? कपड़े होते हैं अपने ज़्यादा से ज़्यादा, एक परफ्यूम खरीदी होती है, liquor आप वैसे भी duty free से खरीद लेते हो. But I now realize that they are scanning it to trace gold, or maybe things similar to gold. So some part of detection will happen there. Some of it will happen through GST. Some of it will happen because of technology and other things. And yes, there'll be incremental changes. It will not happen overnight, because evaders will still find ways. Evaders are also constructive, but they will find their own solutions, and eventually that is why our taxpayer base will go up, because they will say, yeah. Sorry,
I said, if the government truly wanted to stop gold, the simple suggestion is to simply align the PAN card usage threshold. The government of India increased the PAN card usage threshold for gold jewelry sales from 50,000 to 2 lakhs. You don't do that if you want to discourage.
No, but you see,
Let me finish. Okay. When you do a bank deposit, you above 50,000, you have to give your PAN card. When you do a mutual fund above 50,000, you have to use your PAN card. When you do insurance policy above 50,000, you have to do a PAN card. Why did the government increase?
Because I'm answering that because you are giving
2 lakhs?
wrong examples. In all the examples that you're giving, the trade is organized. The bulk of the problem of gold in India is unaccounted money. But gold is not coming in from all these things. The people who are buying gold are buying smuggled gold. It's a full cash transaction. They go to the jeweler, they get it possessed. The jeweler does not even put a bill in. The problem is not the legitimate purchases.
Then in that case, if the government really wants to discourage gold smuggling, all they need to do is cut the import duty and go back to what the government did in 2013, which was to restrict the banks that purchase gold on behalf of the government of the country. There are certain banks like Nova Scotia which purchase gold. The way Titan works is they don't buy gold. They borrow it from Nova Scotia and similar other banks. That's what the government did in 2013. Instead, here they have raised the import duty, which actually increases smuggling.
Yeah, but what I'm trying to tell you is that they think I'm not in that think tank, so my information can be wrong, and I don't want to guess what I don't know. But what I understand is that they are sitting with a group of people in order to address the problem that what is the source of smuggling? Is it a port? Is it an airport? And if it is a port or an airport, then what can we do at the channel? How do we train the custom to confiscate that without creating a problem? So what do? They say the answer is in technology. For example, if you have a handheld device that immediately scans every single box that goes without wasting it and causing delays to the importer, then you will be able to detect because there's already no declaration in place. Similarly, they're trying to speak to international countries, particularly Middle East countries, and enter into transaction. This is the first time ever in the history of United Arab Emirates that it has put a restriction on the Indians' foreign exchange. Do you know this is the first time the restriction is only 6 lakh rupees? Beyond 6 lakh rupees, it has to be endorsed on your passport. Jisse purana hota tha. So they are coming out with their own solution because wo bhi to, it's not the foolproof thing. They have to experiment and find it. I just got this information the other day from people who come and say, now we cannot go to Middle East and buy what we used to buy and all that. I said, Kyun? Why? What's your problem? They said, no, the two problems are credit cards are monitored and secondly, there's an exchange restriction. So the only way those people will do it right now, they will still do hawala because the guy will take money from somewhere there. So he still has to come in a plane, na? Or he has to come in a ship. So they are trying to now see what do we do with the customs overall and what do we do at the airport overall. So you will find in the next few days, like they have introduced these machines for scanning, there'll be bulk scanners that will come in. That entire luggage will be scanned even before it comes to the luggage belt, and they will do markings. So they understand what is to be done. अभी वो वाला टाइम नहीं है कि कोई दांतों में लगा के ले आया. That is time is gone.
Right, sir. So, Aditya, sir, we have taken so much of your time. We have 2-3 small questions. If you allow, then we will ask. Otherwise, we will have you
Achha, I'm
some
going to
other
drop out because I have a 6 a.m. flight, so I must go get to sleep now. I have to travel in the morning. So thank you, and Aditya,
Right.
thank you so
Thank
much
you
for
so much,
sharing
sir.
all your lovely wisdom. I will
Thanks,
read
sir.
up on
Thanks, sir.
more notes because on your Twitter account you do share some very interesting things. And good night to everybody.
Good night.
Thank you, sir. Thank you, Safir, sir, for coming. Yeah.
Thank you, sir.
So,
Yeah,
Aditya,
you can go ahead. Yeah, the 2-3
yeah,
questions we can take.
yeah, Aditya, sir. One question is the MNCs are reducing field staff. So, people want to know your view on that.
Yeah, so this was recently in news where MNCs are basically reducing sales staff and they are out-licensing the molecule to Indian pharma companies, which is essentially a function of what I've been saying, that they have lost 80% market share over 40 years. So the MNCs have basically decided that, look, we can't do this business. We are not competent enough to do the business on the ground. So let's use the ground force of those guys who are good at this business and sell our products through their channel and pay them their fair share for doing this for us. So that is why it's happening. It just ratifies the fact that we have been saying that these MNCs are not really competent on the ground and they lose market share every year, every month. So rather than trying to do it on their own, it's better for them to out-license it, which is what is happening.
Right, sir. One question is kind of stock specific, but he has also asked about the comparison of, I mean, he was asking how Newland is different from other API companies, if you would like to take it.
Sure. So I will not talk about Newland, but I will talk about API space. So in API, you have two types of businesses. First type of businesses, you manufacture API for generics. So your customers will be Sun Pharma, Dr. Reddy, Lupin, who will be buying your product, putting it into their generic product, and then shipping off the generic product to Europe, US, Japan, wherever they want to sell it. The second type of customer is, let's say, a Pfizer or a GSK or a AstraZeneca or a Novartis, who are essentially innovators, and they outsource their manufacturing to you. So this is called custom synthesis, and the previous one is called contract manufacturing for generics. Now, custom synthesis is a high value, low volume, high ROE, and very, very sustainable business, but it's extremely difficult to crack into. Right? Because somebody who has a patent on the process is sharing the process with you. So he has to trust you 100% that you will keep it confidential and you will not use it in any other false manner. So it's a very difficult business to source, right? You're asking for someone's secret sauce, and then you will use the secret sauce to manufacture the product and sell it only to them. You cannot sell it to anybody else. So that business is actually a very, very good quality, very high margin business, and that business is going to grow by leaps and bounds as this outsourcing from MNCs just goes up as we move forward. On the contract manufacturing for generic side, there there are multiple shades. So there are contract manufacturers who do high volume, low value products. That is generally very working capital intensive, very low margin, high asset intensity. So basically, then the companies don't make for a very good investment case, and they will always be cheap, optically speaking. So some of companies like Newland are conglomerates. They do both. So Newland or Heikel, a lot of these DVs, they do both these businesses. So much like the large pharma companies do US and India, and the India is the more interesting piece, US is the less interesting piece. Similarly, in APIs, the contract manufacturing for innovators is far more interesting. Custom synthesis is far more interesting. And the contract manufacturing for generics is less interesting. But the API companies generally tend to have that fungibility where they have the same capacity. And in that capacity, they use the capacity to the extent possible to contract manufacture for innovators. And then whatever capacity is left over, they use it to manufacture for generics because margin comes sahi, but thoda bahut margin to banta hai. So therefore, you at least keep the facility running and utilization full. So it helps you to recover overheads, if nothing else, right? So that's how business models are, right? So to give you examples of companies which are lion's share generics, contract manufacturing are Glenmark Life Sciences, Supriya Life Sciences, Granules India, IUL Chemicals, Solara. These are all 100%, close to 100% generic manufacturing. To give you examples of companies which have a sizable element of custom synthesis, it would be DVs, Newland, Heikel, it would be Sequence Scientific. So these are the guys who have somewhat of a custom synthesis element attached to it. So that is how I look at the API manufacturing space.
Right, sir.
Aditya, this is Sharad Shah.
Hi, Sharad sir.
You run a PMS only of pharma, or it's all inclusive?
No, it is a healthcare PMS, Sharad sir. So we invest in pharmaceuticals, we invest in hospitals, diagnostics, insurers, chemicals.
Yeah.
These are the industries.
So your mandate is to be in this healthcare.
In healthcare, that's right, sir.
But according to me, in India, healthcare is decimated. The valuations that we assign to NATCO or DVs is so pathetic that it's not the right valuation. And about this Lupin is in a dire strait. वो 9 महीना पेमेंट नहीं देता है, सैलरी नहीं देता है, Oro Pharma is a fraud. The rest, I think Natco Pharma, DVs are excellent companies. And I feel some of the pharma names like Sun and all are expensive. When I compare it to US, and I hold Abbott Laboratories since a donkey years. It's done well for me. But otherwise, I don't see any charm in holding any equity in this space. But it is your mandate, so you have to do it. I understand.
No, sir. Actually, that's not the case. Let me sort of help you there. So if you were invested for last 10 years, and this is starting June 11, ending June 22. So if you were in June 2011 to June 2022. So for last 10, 11 years, if you had put 100 rupees in Nifty, today that 100 rupees would be 300 rupees. Had you put 100 rupees in BSE Healthcare Index, it would be 400 rupees. So just simply by investing in the healthcare index, you would have made 100 rupees more than Nifty over the last 10, 11 years. That's point one. Now within the BSE Healthcare Index, there are two buckets. One bucket is companies like the larger ones, which have unbranded generic as a lion share of their business. And then you have the other companies which are branded generics, hospital, API, diagnostics. So if I divide the performance of BSc Healthcare into these two buckets, had you put 100 rupees only in the unbranded generic bucket, which are the pharma large caps today, it would have become 270 rupees in 10, 11 years, which means you would have underperformed Nifty by 30 rupees. But had you invested 100 rupees in the everything else other than unbranded generics within healthcare, which is your branded generic, hospital, API, etc., your 100 rupees today would have been 600 rupees. So you would have outperformed Nifty by 300 rupees over 10, 11 years. So I know why people feel that healthcare has not done well over the past 5 to 7 years. That is because everybody looks at the BSc Healthcare Index to judge whether healthcare has done well or not. But BSc Healthcare Index is 60% large cap. So that performance of those large companies determine what happens to the index, but that is not where the investable space is, according to me. The investable space lies in the bottom 40% of the index, which is where you have branded generics, hospitals, diagnostics, insurers, chemicals, API companies. That is the interesting space.
Now, for DVs, I know you won't answer, but
I'm sorry, he's not audible to me. I don't know if it's my connection or his.
Yeah, we cannot hear him. So one last question, Aditya sir, I'll ask in the meantime he joins. That is, one person has asked, if product patent are there, then how few companies are launching particular drug before patent gets expired? Not Netco and MSN are few examples.
Yeah, so that Safir was explaining when he was on the call. So there is a clause called compulsory licensing in the product patents that India has granted. They've also sort of signed a backdoor into the process where they say that if a pharma company that has a patented product in India decides to launch the product, but the pricing is such that the Indian government decides that the pricing is not affordable for the consumers, then the government can force the pharma company to compulsorily outlicense its product to some 4 or 5. There is a minimum number, I don't recall, at least 4 or 5 companies, which can manufacture the product, sell it at a cheaper price, and they have to pay a royalty to the innovator pharma company whose product is being compulsorily licensed to them. That royalty is set at around 8% of sales. So that is the law. Now, because that is the law, some of the drugs like Nexavar of Novartis, and there are a couple of other examples in the past where the innovator pharma company did not price the product as per what the Indian government thought would be a reasonable or affordable price. And therefore, using the compulsory licensing agreement, these generic pharma companies were able to manufacture that product. So that is why they are available.
Yeah, right. Thank you, Aditya. So, Ankit, if you have any question, then we can take. Otherwise, we will conclude this space. And Aditya sir, it was really wonderful to have you for almost 3 hours. And it was a random space, and you added so much of light to today's spaces. And guys, those who are new and are not aware of Aditya sir, I would request them to see my tag tweet in this spaces. The talking point with Neeraj Shah sir. So in that, Aditya sir has shared all his views in all. Completing the pharma spaces. So those who are pharma enthusiasts, they would be appreciating this. And yeah, Ankit, over to you.
Thank you, Prince, for having me. And it is always great to listen to Aditya sir and Safir sir talking at length on pharma. I have a very simple question, sir. We have already discussed a lot on the positives of pharma. My only question as an investor is, what are the risks if you are exposed only to one sector? Like, of course, as you mentioned rightly, that as a healthcare index, you are probably diversified in terms of not only pharma but also chemicals, also insurance. But if something, how difficult or how risky it is, say something related to FDA or something related to government pricing or government regulations comes in. So how do you tackle that risk when you are exposed to one particular sector, or how risky it is in your view? That would be my only question. Thank you so much, sir.
That's a very intelligent question, and I get it a lot. Look, I don't know how to respond to that question. The only reason why I say that is because people who are asking this question, they are invested in index funds, they're invested in diversified mutual funds, where 40% is financial services, right? So you may think 40% weight in financial services, and after that you have a diversified portfolio. The fact is you don't. You actually have a very, very concentrated portfolio at the index level itself, right? Because you have 40% in one sector. But that doesn't worry you. But the moment somebody thinks of 10, 15, 20% healthcare, they start worrying about it. I can't understand the logic, therefore, of the worry. Number two, what can go wrong in this space over the last 140 years of capitalism, or 150 years of capitalism in US, about 40 years of capitalism in India, if I can call it that. In this space, what I have noticed through studying these timelines in US and India, this is one sector that just continues to grow. There are always regulations in this space. The regulations always keep becoming tougher and tougher, but the space finds way to grow because it is non-discretionary consumption. It is involuntary consumption. We need it to live. Okay, so think of it in that way. It is you may or may not need a car to live. You may go through a lifetime without buying a single car. You may go through your lifetime without taking a single home loan. How many people have gone through their lifetime without consuming a single tablet? Right? It's just not possible. So because it touches everybody's lives, it needs to be regulated, and correctly so it is regulated. But regulations do change the way business is done. It doesn't change the dynamics of the business yet. And when I say yet, I mean 40 years of India and 140, 50 years of US. It hasn't changed the dynamics of the business per se. So yes, US FDA comes and audits and gives some warning letter or something, and the stock plunges. Yes, those events will occur. But that is why, I am saying that you need to avoid those companies which are too much US oriented, because there not only the economics is bad, the regulatory risk is also higher. So why do you want to touch those stocks here? So don't touch those stocks which sell too much to the US now. Touch those stocks which are selling too much to India. Yahan pe, if you sell locally in India, there is no US FDA here, right? And the growth is secular. The pricing power is in your hands. The product is differentiated. There is a brand which gets prescribed, and your brand has a loyalty, a brand equity attached to it. The ROE is 80-90%. There is no need to manufacture what you sell. You can buy from third party, brand it and sell. You don't even need to bloody manufacture it. You just need to promote it. And once you have a fan following going, your product just goes on autopilot. It just grows for a very long time. So that's my response here. I hope I was able to address your question.
Yeah, thank you so much. That really helped. Thank you so much, Aditya sir.
Thank you.
Thank you again, Aditya sir. And guys, those who are, pharma sector lovers, they should surely visit sir's handle, and they will find a lot of educational stuff, especially for pharma domain. So thank you for coming, sir. It was our pleasure to have you today, and really it lasted for 3 hours, and there are many questions feeling short of time. So we would love to have you some other time in your free time, sir. Thank you so much for coming and adding value.
Thank you so much, you guys, for giving me so much time of your time, and really appreciate the opportunity. Good night.
Thank you, sir. Good night. So guys, those who have attended today's space, I thank each and every one of you to spare time and listen to the insights of various panelists who have come, and especially Aditya sir and Velumani sir, with whom we started the spaces, and then Safir sir and many others joined. So it was really wonderful to have such a sticky audiences who were asking so many good questions. So the only idea of hosting such spaces is that more education should be spread. There are various market stalwarts with whom we get to know so much of insight, and their domain knowledge is so vast that we surely get benefited from that. So I would request each and every one of you to check their handles, and if you find value, kindly associate with them, and you will surely love their educational stuff. and I try to bring more such people on my spaces so that I get to learn, and additionally those who join in our spaces, they get to learn as well. So I know I was not able to take questions from everybody, and especially stock specifics. There are limitations we cannot take as we are not SEBI registered advisors, or as Aditya sir is handling a PMS, so there are certain limitations. They cannot comment directly on such names. So with this, I thank each and every one of you for coming today and having a good time. So kindly, if you like us, so do follow our handle so that in future also, if more spaces we host, you will be getting notification for those spaces, and we try to bring the educational content so that everyone amongst the investing community gets benefited. So, of course, as a disclaimer, no any names if taken during the conversation by any one of us or maybe the panelist was purely for educational purposes. Do not consider it as a buy sell recommendation. It's your money. You should be doing your due diligence before investing. So, idea is to learn and do your homework well, and then invest your hard-earned money. So with this, I would take your leave. Good night. Thank you so much. Thank you, Wealthverse Bajpayee ji, for co-hosting today. And Ankit, thank you for your great question to end with. And thank you, guys. We will meet soon. So those who like, kindly follow us. Thank you. Good night.
Good night.